2022. Now, I will be looking for the most active participant per session. So maybe it's you, wherever you are. I want you to engage with us. Post your question or your comment, and the team who's working in the background will be looking through, and they will randomly select the most active delegate and receive a gift hamper. All right. So let's start engaging. Distinguished ladies and gentlemen, it is now my humble duty to welcome the Commissioner for Investigations and Enforcement at the Kenya Revenue Authority, Dr. Edward Karanja, who will be giving us his welcoming remarks. Dr. Edward Karanja, over to you.
The annual tax summit is an annual event organized by KRA to engage the stakeholders, the taxpayers. We use as KRA to get feedback from the stakeholders and see how we can come up with solutions, the pain areas for the taxpayers, and address them so that we can be able to make tax payments a better experience for taxpayers. This year's summit theme is Now and Beyond, enhanced service delivery to improve tax compliance. Our focus this year will be on how to entrench risk-based tax compliance, enhance trade facilitation, and position KRA as a service-driven agency for the future. Specifically, the role of technology in strengthening VAT compliance, the place of data analytics in enhancing tax compliance, and how customs can better support legitimate trade and value chain development in globalized age. Our focus this year is to ensure that we entrench KRA as a service-driven institution by making sure that as we interact with our customers, it will be driven by the risk and by risks in both domestic taxes and in customs. Specifically, we'll be looking at how we can use technology to drive compliance in VAT. We'll also be looking at big data analysis as a way of driving also business. We'll also be looking at how customs can better support legitimate trade transactions in line with the global trends. In this year's summit, we've lined up great speakers across all the areas, in the government, in academia, international organizations, and all our key stakeholders. So this summit, we have great speakers, we have people who have a lot of experience in those areas, and we believe we are going to benefit from the discussions which will be taking place and help us improve on our service delivery. This is one of the summits which we believe that it's a must attend by everyone who would want to be enlightened in terms of what is happening globally in tax administration. So the whole of KRA management, the board will be available and will participate in various discussions. So it's a summit. I would like to take this opportunity to invite all of you and ensure that you carefully follow through the discussions which will be taking place. On behalf of Kenya Revenue Authority, I welcome you all to the 8th Annual Tax Summit, where knowledge meets practice. Karibuni sana.
Thank you very much, Dr. Karanja. Indeed, this is where knowledge meets practice. Now, I asked you to head over and let me know at the Q&A section. Let me know where you're joining us from. And wow, this is very overwhelming. I understand we're now about 1,000 plus. And so thank you so much once more for joining us. I see you, Tivenda Jutla, and you're joining us from Nairobi. Solomon Omware, you're joining us from Kenya. Emmanuel Miliko, you're from Laikipia North. Chelanga Rotich, you're from the Parliament of Kenya. James Mugo, you're joining us from Reading in United Kingdom. Filippo Gola, you're joining us from Fogo Group in Nairobi. Daniel Motiso, you're joining us from Nairobi. Joseph Mogwero from ACCA. And you are saying you expect an informative and eye-opening session this year. Well, we are here to deliver that for you, Joseph. Ibrahim Odhiambo, you're joining us from Kisumu. Lillian Obura, you're joining us from Mombasa, from the Kenya Safari Lodges and Hotels. Mohammed Ali, you're joining us from Kakamega, and you're saying you're here to learn and know about the tax man. Well, that for sure, we're going to deliver for you. Victoria Cheptumo from Debt Enforcement from Kitale Station in Kenya. Carl Karanja from Masai Mara, and you say you're delighted to be part of this summit. Roy Kemboy, you say, I'm Roy, an accountant from Rutuba Limited, and I'm happy to be part of this year's Taxpayers Summit, and you're looking forward to productive engagement. Thank you very much. Keep them coming. They're so overwhelming. And yes, we are going to be looking for the most active participant today. And so your engagement is very important to us. And now, the beginning of this month, which was on 3rd of October, we had the launch of the Taxpayers Month. So the annual Tax Summit is one of the major activities or flagship activities for the Taxpayers Month. And what we launched on that day was the KRA TV. Now, the KRA TV is an online educative platform just to ensure that the taxpayers know more about their taxes. And I'm pleased to let you know that we are now live on KRA TV. The summit is live on KRA TV. And just to give us a quick recap, I'd like to welcome Commissioner for Domestic Taxes, Madam Rispa Simiu, to share the notes, the welcoming address that she gave us during the opening of the Tax Summit month. Media team, please go ahead.
Greetings, fellow taxpayers. On behalf of the Board, Commissioner General, Senior Management, and staff of the Kenya Revenue Authority, I wish to welcome you to the Taxpayers Month 2022. In meeting our mandate, which is really collection of revenue for our country, we strive to facilitate every taxpayer who reaches out to us in filing their returns, paying their taxes, and in every other way that we can support them in ensuring that then we meet this mandate. As we look at ourselves amongst our staff, with our taxpayers and everyone around us, even in the Kenyan spirit, we strive not to leave our kin behind. Taxpayers Month is a very important month to us in the sense that it gives us the opportunity to engage with our key stakeholders, the taxpayers, to interact at different levels with them, to better understand them, what the successes that we have recorded, the challenges that they continue to face in interacting with us. It also gives us an amazing opportunity to showcase our facilitative spirit of reaching further and deeper into the community as we give back. To us, it is indeed a great honor to serve our country in the capacity that we are in. A lot. This Taxpayers Month is going to be a very exciting one. We have planned very many activities where we will have the opportunity to continue interacting with our taxpayers. These activities will be done both in Nairobi and in the regions outside Nairobi, which then further cements the theme of leaving no one behind. In particular, we will be launching an exciting and new service for our taxpayers. We will also have our annual tax summit where we would have in-depth, interesting conversations on revenue generation and collection. This will be discussions where we'll have a meeting of great minds, both within Kenya and beyond. To cap it all, which will be the highlight of the month, we will have the Taxpayers Day towards the end of the month. This is a day that has been set aside to recognize our esteemed taxpayers, those who have consistently filed their returns, paid their taxes diligently, and continued to be compliant in their tax affairs. I would like to personally thank our esteemed taxpayers for diligently filing and paying their taxes where due. I would also like to welcome you to this year's 2022 Taxpayers Month. Happy Taxpayers Month.
Indeed. Thank you very much, Mrs. Rispa Simil. She is the Commissioner for Domestic Taxes right here at the Kenya Revenue Authority. Thank you very much for your engagement. I've seen loads and loads of your comments telling us where you're joining us from various parts of the country and across Africa. Keep your conversations coming in the Q&A section. Like I said earlier, we have a panel of experts who are ready to handle your issues, your questions in the Q&A section as well. Distinguished ladies and gentlemen, it is now my humble duty to welcome the Kenya Revenue Authority Commissioner General, Mr. Githim Mboro. Mr. Githim Mboro is a member of the Golden Heart and a chief of the Burning Spear. Mr. Mboro will then invite the KRA Board Chairman, Ambassador Dr. Francis Muthaura, to deliver his address to us. Good morning, Mr. Commissioner General. Over to you.
Thank you very much, Wageni, and good morning.
Good morning, sir.
The KRA Board Chairman, Ambassador Francis Muthaura, the KRA Board members present, our KRA staff, distinguished delegates, ladies and gentlemen, good morning. Allow me to proceed to my opening remarks. I'm delighted to join you as we begin this year's tax summit. This summit is part of KRA's Taxpayers Month activities aimed at bringing together experts and policymakers to engage on pertinent issues that affect our tax systems. This year's summit forms part of KRA stakeholders' engagement strategies that provide an opportunity for KRA to engage its partners in open dialogue and develop practical solutions to various economic and tax challenges. We believe that viable solutions to various challenges can be developed when key stakeholders and major economic players meet and engage in such discussions. This is the 8th year that KRA is hosting this summit since its inception, and through this forum, KRA has collectively reached over 12,000 participants and audiences, including but not limited to public servants, technocrats, tax professionals, civil societies, private sector players, academia, among others. The summit has also drawn together over 100 speakers from more than 50 different countries. The tax summit, ladies and gentlemen, is significant to our operations and implementation of various recommendations from the previous fora. KRA has been able to improve service delivery and enhance revenue collection. The theme of the 8th Taxpayer Summit is now and beyond, enhance service delivery to improve tax compliance. The discussions come at an opportune time when KRA is focusing on its journey to transform to Kenya Revenue Service, with a focus of improving service delivery and enhancing compliance. One of the most effective ways of addressing non-compliance is through offering quality and efficient tax service. It is projected that where there is a superior tax service quality, then voluntary tax compliance among taxpayers is promoted. This is because when a customer is treated with courtesy and with respect, then they are able to do more. At KRA, a taxpayer remains our ultimate customer, and their gratification is a primary motivation towards transforming our processes to make them easy and simple for them to comply and meet their tax obligations. Ladies and gentlemen, the authority's key focus is to become a service-oriented revenue administration. The authority has therefore begun implementing an open door policy that embraces approachable mechanism in serving taxpayers. Through our robust stakeholder engagement plan, KRA is now able to facilitate structured engagements which help to tackle key tax issues. KRA has progressively enhanced its service delivery and technology has played a key role in improving our services. The use of technology reduces the burden of manual tasks by automating the processes. KRA continues to leverage on technology to improve speed and accuracy in its tax services. For example, the iTax system has integrated almost all processes, making it convenient for taxpayers to access services while enhancing KRA's efficiency. Today, our customers can access most of our services at the comfort of their homes and offices. KRA has also enhanced its customer services, which has consequently aided trade and improved ease of doing business in Kenya. The rollout of the integrated customs management system has modernized customs and border control operations. The system has enhanced cargo clearance and processing time and has improved compliance and increased our operations at the port. Ladies and gentlemen, I'm pleased to inform you that KRA has implemented a number of recommendations that have been employed to resolve taxpayers' concerns, which include implementation of a customer relations management system. This is a system that we use to engage our customers. The development of the M-Service platform to cater for the needs of all segments of taxpayers. Here we are saying you are able to pay your taxes or even receive our services through your mobile phones. KRA has also collaborated with the Kenya Institute of Curriculum Development in mainstreaming tax education in competency through the launch of a tax-based curriculum. We would like our children, as they go through school, to become educated on tax matters. We have also seen the acquisition of a cargo scanner management solution that has automated and centralized our cargo scanning. Here, what we are saying is that we have now integrated all our scanners across the country. We are able to view them from a single command center, and we are able to receive those messages and analyze them as required. We have also operationalized the data warehouse solution that facilitates the use of data-driven compliance and interventions. Ladies and gentlemen, in this solution, we have integrated with other databases, and we are able now to receive information from those databases, then analyze the same and use it for our compliance management. We have also deployed and effectively used our electronic cargo tracking systems, which allow us to monitor goods from the port of entry all the way to the countries of destination within the region. And that has enhanced or significantly reduced dumping of goods. We have also effectively employed our accessible goods management system, which allows us to then monitor and ensure that taxes are properly paid on accessible products, including alcohol, alcoholic products, and cigarettes. Finally, KRA is also implementing the tax invoice management system, which provides real-time information on business transactions. We believe that the launch of this tax invoice management system will enhance our efficiency in collecting value-added tax. I am optimistic that by the end of this two-day forum, we will document key ideas which we can implement to enhance our service delivery and transform our tax administration in our quest to become the Kenya Revenue Service. I wish us a very successful and fruitful deliberations as we chart a way forward for our tax administration and tax administration globally. I now welcome the KRA board chairman to make his opening address. God bless you.
Thank you very much, Commissioner General, our esteemed taxpayers, fellow board members, chairpersons and CEOs of various associations, tax consultants present, distinguished guests, ladies and gentlemen. I wish to welcome you all to the Kenya Revenue Authority's 8th Annual Tax Summit. The Annual Tax Summit brings together experts and specialists for open discussions on the various tax-related matters affecting tax administrations around the world and their possible solutions. During this year's summit, we will converge to discuss the subject now and beyond, enhanced service delivery to improve tax compliance. The theme is an inspiration to the need of tax administrations to create a pleasant customer environment that will foster a tax compliance culture to enhance voluntary compliance. Globally, tax compliance administrations have been striving to undertake reforms and adopted various measures to enhance excellent service delivery. This has proven critical in the facilitation of tax collection through voluntary compliance. This has also led to reduced costs of tax collection. Growing revenue collection through customer service is now at the core of achieving the fiscal targets. This has not only transformed the traditional ways of revenue mobilization through enforcement, but has also strengthened the bond between tax administrations and the taxpayers. Tax administrations serve diverse customer segments. The requirements of large taxpayers are different from those of the medium taxpayers and those of small taxpayers. Even the individual taxpayers have their distinct requirements. It is therefore paramount for tax administrations to develop policies that respond to the needs of various customer segments. It is fundamental for the tax administration to understand all their taxpayers, develop policies that respond to their needs, and implement the appropriate service delivery strategies which correspond to the taxpayer needs. KRA has continuously improved the tax system in the country with the goal of enhancing efficiency and improving customer satisfaction. We continue to implement strategies aimed at becoming a customer-centric organization. We have commenced our journey to transform from KRA to Kenya Revenue Service. This will enable KRA to review its processes and make them simpler, as it also upgrades its technology to enable multi-channel interaction that is simple and secure. The authority is also working towards transforming its workforce to be more customer-centric and responsive to the challenges of taxpayers. As I conclude, I wish to challenge all the great minds gathered here to use the forum in coming up with the recommendations that will position our tax administrations as respectable position on matters of tax. I once again welcome you all to this annual tax summit to engage in these wide-ranging subjects aimed at providing innovative and most efficient ways of enhancing service delivery and consequently tax compliance. I sincerely thank you very much.
Thank you very much, our KRA Board Chairman and the KRA Commissioner General. Indeed, the great minds gathered in this summit, I'm told we are over 1,900 of us. We've accepted the challenge to use this forum to come up with recommendations that will position our tax administrations at the pinnacle of our nations. Thank you very much. Distinguished ladies and gentlemen, thank you very much for your chats and just letting us know where you're joining us from. Thank you, Celestine, who's joining us from Busia. Thank you, Mark, joining us from Tabasin Group right here in Nairobi. Thank you, Bernard, for joining us from CDN in Nakuru. Emmanuel Wesangula joining us from Bukoli in Bungoma County. Marion from the Sinovate Center right here in Nairobi. Ladies and gentlemen, the Q&A is open for you. Do you have questions for us? The subject matter experts from KRA are here and ready to answer your questions. A gentle reminder is that we are also on our social medias. We are streaming live on KRA TV and on YouTube. Ladies and gentlemen, the Tax Summit is now in its 8th year. To give you just a little background of where we are coming from, this is our story. Isn't it amazing to just look at the history of the annual tax summit? We had it before COVID, we had it during COVID, and now we are blessed to have it post-COVID and continuing with the tax conversations. Distinguished ladies and gentlemen, we have hit the 2000 mark and we're excited. Thank you so much for telling a friend to tell a friend to join in, because now it is time to begin our conversation. Here to deliver on the keynote address on enhancing risk-based compliance. What are the achievements? What are the challenges? What are the prospects? Is Mr. Justin Zake. Mr. Zake has over 30 years experience in revenue administration and technical delivery at the Uganda Ministry of Finance, the Uganda Revenue Authority, and the International Monetary Fund. Mr. Zake has been a member of and also led capacity development missions to various countries across the world. We are indeed honored to have you, Mr. Zake, joining us from Washington, D.C. He was with us from about 1 a.m., and so we're grateful that you could join us. Mr. Zake, please, over to you.
Thank you very much, Wageni, and it's really good to be here. I thank the organizers for inviting me to give this. It's called a keynote speech, but I'm just going to be sharing experiences, sharing some thoughts, and probably some perspectives that are sometimes not thought about very strongly. I'm really impressed by the participation of over 2,000 people right now and ticking. And thank you to the board chair of Kenya Revenue Authority, Commissioner General, senior management and staff of Kenya Revenue Authority, guests from beyond Kenya as well, all taxpayers on the call and those who are watching on the stream, partners of Kenya Revenue Authority, ladies and gentlemen. I've been introduced. I head the TDAT Secretariat, long word, but we'll explain that as we go along. But there are some perspectives that I would like to bring through. And when I was looking at the topic and also hearing from the Commissioner General, the theme of now and beyond, and I agree, it's really now and beyond. We need to do now and beyond. And looking at the title itself, risk-based compliance, there was really no clear definition of risk-based compliance. It is normally directed at taxpayers. That taxpayers, you must comply or should comply, and Kenya Revenue Authority provide the service so that taxpayers comply. I want to pose a question here. What about compliance of Kenya Revenue Authority itself and the staff within Kenya Revenue Authority? And again, food for thought. And this is something that has been on my mind for a long, long time. To what extent do tax administration overtly or covertly impact or encourage non-compliance? That's food for thought. On the next slide, I'm just going to go through a broad presentation framework. Next slide, please. And I'll be looking at the context. I'm approaching this whole keynote speech or conversation with the background of the TDAT, Tax Administration Diagnostic Assessment Tool, which has been in place for over 8 years now. And the essence of the tool itself, or the methodology, is to gauge the strengths and weaknesses of a tax administration. As I speak now, we have conducted 144 assessments around the world, both at the national level, or federal level, and the subnational level, or in Kenya, it is counties. And in Kenya, 11 counties have been assessed. There's an assessment being finalized now, Iraq, and that will be coming through in the next 2 weeks or so. So I'll give some definitions in the context of what I'm talking about, compliance management, risk management, and where we are coming from, compliance improvement planning, And then I'll give you some evidence around risk-based compliance management. I'm adding the word management because I'm cutting it both ways, from a taxpayer perspective and also a tax or revenue administration perspective. So globally, I'll give you data. As of yesterday, the 144 data assessments, the situation as we see it through our diagnostic tool to that, and Kenya Revenue Authority has undertaken 2 assessments, one in 2016 and another in 2021, to see whether progress has been made. And I also give you the perspective in sub-Saharan Africa itself. So out of the 144 assessments, total assessments, 68 have been in sub-Saharan Africa. And issues for reflection: quality service delivery, enhancing risk-based taxpayer compliance. But I'm also thinking about it from the aspect of tax administration adherence to basic standards of delivery. I've been going through the chat and the comments that are coming in now and beyond. That's what it's really saying. And then, you know, I'll give you a perspective on what we've seen using artificial intelligence stroke machine learning algorithms on where we should really be going and where we should be focusing. Next slide, please. As the next slide comes up, the Tax Administration Diagnostic Assessment Framework, the TADAT, we have 9 performance outcome areas that range from registration of taxpayers, risk management, supporting voluntary compliance, and in there's an issue of service delivery. And then, you know, timely filing and payment of taxes, how accurate the tax returns are, or the filings are, whether in a debit or credit position. And I've seen issues on refunds and VAT filing coming on in the chat. And then the issues to identify the strengths and weaknesses and where to go from there. So it's really providing a baseline for reform. The other area that is germane for this particular, seminar is compliance management itself. The cardinal issue here is facilitating taxpayers and ensuring that they meet their obligations or fulfill their obligations. And these are really 4: registration, filing of returns, payment, and I have inserted refund of taxes because that's another issue. And then accurate reporting by the taxpayers and being fair to the taxpayers on the tax administration side. And of course, we have risk management. You can't do everything, so you need to prioritize and go where it seems to hurt most, but also do a random selection of interventions and conversations with taxpayers. On compliance management planning, that there must be a structure of sorts, documenting whatever risks have been identified. And here I'm broadening the issue of risk, both taxpayers and within the tax administration itself. That's why I said, to what extent do tax administrations, let me use the word, encourage non-compliance, inadvertently or otherwise? And then at the end of the day, monitoring all these interventions, including service delivery and the conversations with taxpayers and other stakeholders, because talk about taxpayers and may not necessarily talk about other stakeholders, but other stakeholders who watch and see what we do as tax administrators also have a view. They have a perception that should be taken into account. And at the end of the day, reviewing and refining the compliance improvement plan or planning in that instance. This is just a broad view of the TADAT framework as a context, that we have 9 performance outcome areas. I just went around them, registration through to accountability and transparency. There are 9. And then how the measurement framework works, that we really have 55 at the national level, dimensions from where we start measuring performance, and then 53 for the subnationals. But it's actually a very interesting framework, especially when, as I will do, talk about the linkages or the associations or interactions or impacts between the measurement levels. And really that is really for the beyond, but we should start now in order to go to the beyond. Next slide, please. And in this instance, because we are talking about compliance risk management, the TADAT framework, I'm using TADAT, has a performance outcome area number 2 that deals with effective risk management. So I'm putting all this keynote speech or conversation in context. What we all desire is that risk to revenue and tax administration operations, and I will add, businesses or business transactions are really managed effectively. We identify whatever risks there are to the revenue, to the tax administration, to the economy, and then we manage them effectively. In this particular instance, we are talking about tax, and this is what that framework has. You identify the risks, you rank them, and quantify them. So you don't need to go to everybody. There may be a random, but you focus on where it hurts most or where the higher risks. And then once you've identified these, ranked and prioritized them, what are you doing to mitigate these risks? I mean, a risk may be low, it may be high, and I'll show you very shortly some of the interventions that can easily be used depending on the level of risk. So you need to intervene. And then at the end of the day, monitor and evaluate what you're doing. Service delivery is one answer to these risks. So you start, as the West Africans say, jojoing with the taxpayers and other stakeholders. Not only taxpayers, but other stakeholders. And those stakeholders that include staff of the tax administration itself. So to what extent, from a horizontal perspective, is Kenya Revenue Authority jojoing with taxpayers? Yes, that has been illustrated. Digitalization has been introduced. What about the staff? What you realize, and I've been in tax administration, I come from Uganda and just across the road, and I was in the tax administration. So tax administrations and also the tax-paying population and stakeholders have their grapevine where they exchange messages. To what extent is Kenya Revenue Authority leveraging those messages? Some may look innocuous, some may appear to be offensive, but when you look at an offensive communication, you draw threads from it, and it's an opportunity either to say something or do something, but to improve on what and how you perceive things and how you transact. Next slide, please. And this particular slide, and I noticed that there's a blob at the bottom of the screen, at least this is what I'm seeing. That particular slide has 4 quadrants. This is risk differentiation. So how do we differentiate the risk? And this is really targeted at both the taxpayers and the tax administration themselves. So you have 4 quadrants. The one on the upper right is where you have the highest risk taxpayers. You detect and deter in real time. I saw a comment on the chat. Why aren't some people paying tax? Why are they being exempted? The rich being exempted, and I mean, it's looked at as some kind of discrimination. But from a taxpayer perspective, so the quadrant 1 in upper right-hand side is where you have the high risk or non-compliant taxpayers, most non-compliant taxpayers, and there you detect and deter in real terms. As we move towards the bottom, the quadrant 3, where we have medium risk taxpayers, there are certain interventions that have been indicated in there. Assist them and encourage them to pay. So service delivery is an important point here, including digitalization or making life easy for people to comply, taxpayers to comply. And then on the upper left quadrant, you have your key taxpayers who should be engaged continuously and supported as well, so that these who contribute close to 70 to 80% of your revenue are really engaged. You know, you're co-creating with them. You're not doing things on your own. You know, you're bouncing things off them. Not that you're not doing it for the others as well, but engage them and support them. And the bottom left, the lower risk taxpayers, just simplify things, make it easy. You look at the developments in technology, and who would have believed long ago we had these telephones on the desks, the dial telephones. So you dial the thing and, you know, you communicate. Now we have mobile phones, and those are making things a little bit easier. So this is the risk differentiation, but it must cut taxpayers, the tax administration, and the tax administration staff, and the conversations that need to be had between and within that nexus. Next slide, please. Now, I just want to give you a perspective of what we have seen. We've analyzed the data out of these 144 assessments as of yesterday. And on your left-hand side, you'll see the total 144, Sub-Saharan Africa, 68 assessments that have been conducted, and then Asia Pacific, Europe, Middle East, and then the Americas. On your right-hand side, the orange, this is across all the tax administration assessments that we've done. You're looking at the extent to which people have actually done well or not. The yellow at the top is saying there's a deficiency in there. So in identification of risk globally, 24% of the ratings, were very poor. So 24%. Then in assessing and in terms of prioritization of the various risks, we are seeing 49.6%, 50% for mitigating. These are initiatives that have been undertaken to mitigate the risks. And then the last one is monitoring and analyzing the impact analysis. What have your interventions told you? Are they palatable or not? Are they achieving what you want to achieve? And thank you very much for moving very quickly on the Sub-Saharan Africa one. You can see the situation is not as good. And what worries is that assessing and prioritizing taxpayer compliance risks is extremely poor. In fact, if you add the 63% and the 23% odd, really we are 87% out of line. So assessing and prioritizing is a problem. And again, here the next one in terms of mitigating, 90%, 94%. And then another, we don't analyze the effects or impacts of mitigation. That is another 88%, nearly 90%. So now and beyond, what are we doing? How are we doing it? How can we do better? Next slide, please. And these are reflection issues, service delivery and digitalization. I'm not going to go through the whole of it. I'm mindful of the time. To what extent does quality of service delivery enhance risk-based taxpayer compliance? We assume that it does, but have we analyzed it? In fact, one of the things that we look at in that framework, we have something called, promoting or encouraging voluntary compliance. So much money is poured into this particular area: roadshows, adverts, KRA TV, and so on. I'm not saying it's not working, but is that on its own enough? I've said, to whom are we directing risk-based compliance? Staff or the taxpayers, a combination thereof. Food for thought. Are we integrating it in other delivery approaches? Customer relationship management issues for both staff and taxpayers. I'm bringing in staff of KRA and other tax administrations in this question. And sometimes service delivery is an afterthought. I am glad that the Commissioner General has talked about the thrust for service delivery. And that's important. And then digitalization, it has its benefits, but on its own is not enough. You can give somebody a mobile phone and say, there you are, but they use only 0.5% of the functionality. So there are issues in there. And we all realize, the slide that has just been put on, that there's organizational complexity. Organizations are complex, and you will read the quote from Dooley on that. But I think the essential thing is, and what we found, do people actually in the organization itself talk to each other? Or do they compete with each other? I was in Brazil, and I was addressing very senior people, equivalent of county secretaries. And I asked them, in your own organizations, do people collaborate, support each other, or do they compete with each other? That's a major question. And as we do go on in the deliberations, something that we need to address. We may be competing with the taxpayers to collect the money, but internally, are we competing with each other rather than supporting each other? Next slide, please. And as I've told you, we've done some work using artificial intelligence, machine learning, and we see associations across all the key dimensions or the key functionalities of tax administration. This slide itself would take a long time to explain, but essentially what it is saying, and I'll give an illustration. If Ambassador Muthaura depends on the Commissioner General, and the Commissioner General depends on me or RISPA, there may be a direct relationship between the Ambassador Muthaura and the Commissioner General, and the Commissioner General dealing with me. But if Commissioner General does anything, he will impact both Ambassador Muthaura and myself. So they are direct, and the direct linkage, Ambassador Muthaura, Commissioner General, and myself. But if I do anything that impacts Commissioner General, it'll also impact Ambassador Muthaura indirectly. How are we collaborating? And I know for a fact now, because I've been working with KRA on some of these issues, they are now trying to map, and that can be elaborated later, trying to map how these interactions within KRA work, whether there's collaboration and support for each other, and how that can be taken to the next level, the beyond. We start now and then go beyond. Those are issues that need to be looked at. Are we encouraging, or are we not encouraging voluntary compliance? Our own mechanisms internally and how we operate. Next slide, please. And I'm not going to go too deep in this, but we've been able to map, who depends on the other, just like I've said, Commissioner General depending on Ambassador Muthaura, and Ambassador Muthaura indirectly impacting myself or me. Next slide, please. And this is just a snapshot on the risk management area, which includes human capital risks and operational risks, and all these interact with each other. So you'll when they give you a slide, you'll see how these interactions happen, that this particular area, identification of tax compliance risks, is impacted by directly, or impacts accuracy of the taxpayer register, and so on, and then the detection of unregistered taxpayers, and so on and so forth. So this is really the conceptual approach. Next slide, please. I'm about to finish. In summary, we should be looking at the interrelationship of the activities within the tax administration holistically, and put in place interventions that encourage support and collaboration within the tax administration. That then reflects out there to the taxpayers. And if you're just focusing on specialist functions and so on, and operating in silos, as opposed to horizontality, there is a problem. And we actually may, as an organization, think that we are delivering service out there, but we actually disimpacting, if I may use the word, disimpacting ourselves internally. We are not moving as a team. It's really a divide and rule issue. I've seen some comments on the chat that can be responded to. And again, digitalization on its own is not a solution. It is a good solution, but it must be, it must interact with other organizational functions, and measuring all these multidimensionally. Pulse and other surveys can be done internally and externally, but importantly, let's all co-create, both within the Kenya Revenue Authority or intra-tax administrations, and then with external stakeholders. It works. It has worked for me in whatever I've been doing, and it should be able to work for Kenya Revenue. I thank you very much.
Oh, wow. Mr. Justin Zake, I think we were not prepared for you. Mr. Justin Zake, I think we were not prepared for you. Thank you very much. Mr. Justin Zake is the Unit Chief at TADAT, which is the Tax Administration Diagnostic Assessment Tool Secretariat, based in the Fiscal Affairs Department of the International Monetary Fund. You have thrown a lot of challenges our way. I like that you've started with, to what extent do tax administration encourage tax compliance? And then you taught us a new one, jojoing. And you jojoed for us. I'm just challenging us in terms of where is sub-Saharan Africa in terms of compliance? Why are we performing dismally based on what you shared with us, the statistics that you have shared with us, and to whom are we directing risk-based compliance? To help us break down that conversation, understand it more in context, share a bit more experiences from various countries, from Kenya, from Rwanda, from Uganda. I would like to bring on board our discussants, and the discussants will break down Justin Zake's keynote address, quite heavy hitting right there, but we'll focus a lot on tech for VAT compliance. Now, teams in Kenya is being rolled out. KRA is currently rolling out the tax invoice management system, and it is a key strategy for enforcing implementation of the VAT regulations. Now, to bring on to us our group of panelists, I would like to introduce them one by one. We have 4 panelists, as you can see on your message board right there. The first one is Mr. Mukesh Shah. Mr. Shah is a board member at the Kenya Revenue Authority. Alongside being a KRA director, Mr. Shah is the director and founder of Strategic Consultants Limited, a practice that he established in 1992. Now, this practice provides specialized consultancy services in the areas of strategic planning, high-level advisory to family-owned businesses, business revival and reconstruction and mergers and acquisitions to national and international clients. Our second discussant is Mrs. Rispa Simiu, who is the Commissioner for Domestic Taxes at the Kenya Revenue Authority. Mrs. Simiu is an advocate and a seasoned and ground tax professional with over 21 years experience. Before joining KRA, she served as the Standard Chartered Bank Regional Tax Manager for East Africa, where she also covered transfer pricing assignments in the larger Africa, Middle East, and Pakistan. Our third discussant, joining us from Rwanda, is Mr. Jean-Louis Kalingondo. He is the Deputy Commissioner General of the Rwanda Revenue Authority. Prior to joining the authority, capacity, Mr. Jean-Louis was the managing director of the Rwandan subsidiary of Harel Malak Technologies, a system integration company based in Mauritius with several branches in African countries. In that capacity, he helped deliver solutions to various Kigali-based banks and government institutions. And our last discussant, but definitely not the least, is Mr. Swalehe Biarugaba. He is the Deputy Commissioner Operations of the Tanzania Revenue Authority. Ladies and gentlemen, welcome to this discussion. I think I just want to start with Director Mukesh. Director, good morning, and how are you today?
Good morning, Wageni. Exciting to be part of this this panel today, and to really appreciate the many participants who have joined today. I think it's tremendous that there is so much interest in this summit. Thank you.
Thank you, Director. One quick thought of Mr. Zake's presentation today. Were you challenged?
There's something Justin said, which I think resonated very, very strongly. A question whether it's compliance of KRA, taxpayers, and its staff, or is it just the taxpayers? And I think that's a very important point I would take away from this session, that the compliance aspect is direct and should be directed to staff as well as to customers. Justin, you talk of taxpayers, we talk at KRA of our customers, and our journey of delivering a service and being a service-oriented organization is started in earnest, and our objective is to ensure we deliver a service and continue to enhance the service delivery. So it's equally a responsibility of our staff, of KRA as an organization, to ensure that the staff are compliant in all manner of their work in terms of providing a service to customers. And we should be measuring that, and we are measuring that in terms of performance contracts of our staff in order to ensure that we deliver the highest level of service. Quite often, we get accused that because of collection targets, the focus is on only collection, and the service aspect perhaps diminishes. But the thrust from the board and management is to ensure service delivery, and that's a journey that has started, and it's an irreversible journey.
Thank you very much, Director Mukesh. I want to pick it there from the irreversible journey and talking about tax compliance. Before I bring in Commissioner Rispa, let's talk a little bit about VAT compliance. What drives the importance of VAT to revenue administrations, and more so in KRA, before we go to Commissioner and she talks about teams?
Thank you, Wageni. VAT in Kenya was introduced in 1990. As a measure to increase government revenues through expansion of the tax base. Globally, we are all aware that VAT is perhaps one of the easiest form of tax systems to ensure compliance. Since its introduction, VAT was expanded to goods and services, and then to retail and wholesale trades. The rate, as we know, has varied from 16 to 18%, and then there is, of course, the zero rating, and more recently the 8% on fuel. The technological transformation of VAT started in 2005 when the ETR gadgets were introduced. That was a step change in terms of revenue collection from VAT. By having that system, revenue enhancement occurred. However, as time progressed, the taxpayers some of them, I stress, found ways of beating the system, if I can call it that. And in that context, it's very important to recognize and appreciate that over 90%, nearly 92% of taxpayers are compliant. They're following the rules and doing the right thing in filing returns and paying their taxes. It's between 8 and 10% of taxpayers who need some encouragement to comply. And that's where a lot of the energy and effort of the authority goes in terms of ensuring compliance. There are some global standards in terms of what to expect from VAT. In our economy, our target of VAT collection as a percentage of GDP would be around 6%. We are not quite there yet. We are at about 4.2%, and therefore we have a gap. And that's a gap of around 40% or 39, 40%. If we were to bridge that gap and collect all possible taxes that would arise in VAT, we would have an additional around 300 billion of tax collection. Now, imagine the impact that would have on our economy. The possibility of doing that, enhancing tax collection, is very much there, and that's why TIMS will talk about that as we go along. TIMS is the next step up in terms of enhancing revenue collection. Automating tax collection is a way forward in all economies now, so that you are able to track transactions and ensure that where they are taxable, due taxes are paid properly and on time. In the days gone by, when we were not digital and we were manual records, there were a lot of scope for manipulation, under-declaration, non-declaration, and therefore the country as a whole was losing out on rightful tax dues. So I hope that kind of gives you a little flavor of to the point you asked, Wageni.
Yes, it does, Director, and thank you very much. And you've actually set the stage, because I want to bring in Commissioner Rispa. Commissioner Rispa, Mr. Zake has challenged us on the differentiation approach, which Director Mukesh says 92% are what Mr. Zake named as the key taxpayers. All right. But now we are introducing teams. How do we integrate teams? First, could you give us an overview of teams and how that will help us in terms of the compliance approach that KRA is taking?
Thank you, Wageni. And let me say it's nice to meet Mr. Zaki again. The last I saw you was in the TADAT class. And when you did that presentation, it actually took me back, I think it was January this year. And I liked the challenge actually when you said, to what extent do tax administrations actually encourage non-compliance, whether deliberately or inadvertently? And, it got me thinking of a number of things. And even from the comment that we may be going digital, but the element of service orientation must be there for us then to succeed. So looking at our journey of teams, and Director Mukesh has indeed painted VAT and the implementation of this whole process. This is a journey that started probably about 2 years ago with the preparation of the regulations and looking at not just Kenya, beyond. Many other jurisdictions have gone down that direction. When you're talking about digitalization, when you're talking about e-invoicing, a number of jurisdictions have gone down that road, and there are immense benefits that come with it. So apart from building efficiencies, even just for the tax administration, it also goes to the taxpayer, in the sense that when you're talking about filing, pre-population of returns, when you're discussing aspects of tax refunds, which continue to be a pain point for taxpayers, if the implementation of teams then can pull us back as a tax administration from being, in the books of the taxpayer all the time, because we can see the information, the detail on our end, either real time or near real time. So what has our journey been like? Effective date was 1st of August, 2022. And like I said, after probably a 2-year or more or less 2-year journey, and this is the backdrop of the older ETR device, which had its own challenges, as Director Mukesh has painted already. So we are going down that direction where it is not questionable what that has been transmitted or not. What the taxpayer is seeing is what we are seeing. So we have one single source of truth, actually, to put it that way. Now, as it is with our population of taxpayers, the approach that we have taken is look at, again, at our 80-20 rule. Whereas it has not been a fast journey as we would have wanted it to be, even with that implementation date of 1st of August 2022, there was still the challenge of the availability of the devices in the market. And as such, we've continued to engage very closely, talk to our taxpayers as we walk this journey together to ensure that then we don't go out and penalize them in a situation where then it is not really their fault. So we have that conversation where there are challenges on the part of the tax administration. We own up and we say, okay, fine, we admit there is this challenge. This is what the law says, but to what extent can we administratively then be flexible to accommodate taxpayers, our clients in that case? And this then, I believe, should bring out that service orientation from our part, so that it's not just KRA saying you must, and in this case, not really KRA, actually the law, because what we're doing is implementing the law, but also bringing out that human aspect of saying, okay, fine, this is what the law says, this is what you're expected to do, but what then is the reality on the ground? Are there instances where you've not been enabled to comply? So again, stepping back and looking at the approach, our various TSOs, large taxpayers office, medium taxpayers office, and the other TSOs, we have opted to take the 80-20 rule. Who are the 20 that give us the 80? So that then we have a more strategic and more pragmatic, practical approach on the onboarding of our taxpayers. So as it is now, we have just slightly above 35,000 taxpayers who are already up and running, transmitting, and this is out of a population of, say, active filers, who active, maybe when you say active, could be paying or credit filers of about 113K. So a journey, we have started the journey with the availability of the gadgets. We are getting there. About 68 to 70% of the large taxpayers and the medium taxpayers are already on board. And what this then means is that the large taxpayers and the medium taxpayers are transacting with taxpayers who are in these other tax service offices. So inevitably, for you to be able then to comply or to even continue transacting with these ones who have already complied, then we are continuing to encourage our taxpayers to onboard. And at the end of it all, it is important that we look at it from all angles, that it is not just for the sake of the tax administration, but more importantly, for the benefit of our taxpayers as we simplify our processes, as we try to make tax compliance easy. Thank you again.
Thank you very much, Commissioner Rispa. And I think you've even adequately responded to the challenge from Mr. Zake. And I challenged us to move from competition to collaboration, and perhaps now the new term should be co-creation. Allow me to request our distinguished guests who are joining us online. Our Q&A is open for you. Do you have a question for our keynote speaker, Mr. Justin Zake, or any of our discussants? Please head on to the Q&A. We are going to collate your questions and forward them to our panelists and keynote address. We have had the Kenyan experience. Where are we in terms of the implementation of teams? I want us to cross the border and move to Rwanda. I want to bring in Mr. Jean-Louis. Mr. Jean-Louis, what is your experience so far? We're itching to hear the Rwanda experience with technology-driven VAT implementation and compliance.
Well, thank you very much. First of all, allow me to quickly express on behalf of the Commissioner General of Rwanda Revenue Authority our heartfelt thanks for this invitation to be part of this very important conversation. I think this kind of summit, this kind of conferences lead to a greater awareness among tax administrations in Africa in general about the issues which are at hand, the challenges, and the solutions and approaches that our peers have adopted. So therefore, we do welcome such opportunities, and it is indeed a great privilege to be able to sit here and hear from people like Mr. Zake, whom, like our colleague Mrs. Simiu, we have also met in the context of a classroom when we were being acquainted with the TADAT. So without further ado, let me delve into the question itself. The Rwandan experience, the Rwandan journey is pretty much known now. It's been documented in various studies. We implemented our electronic invoicing system since 2013. By 2017, we moved on to a better version of that electronic invoicing system, which we call our second version, basically, which gives us much more details about transactions that are being received. So it has been a successful campaign, given the fact that we've observed a long time since 2013 when we started to today, that is 9 years later, a growth in registered taxpayers who are using the electronic invoicing system that we call EBM here, from 6,000 approximately to more than 39,000 today. So that's been a positive growth, first of all. So by 2020, through a change in the law, we also decided to extend the usage of such devices as control tools to non-VAT registered taxpayers. And we believe that given the direct link that exists between VAT as an indirect tax and the income tax, this has helped us a lot to improve on the control that we exert even on the income tax also. So it's been a very, very positive experience in that sense. So maybe if I go a little bit more in detail, since we implemented the EBM, we started in 2018 effectively to implement also specific controls related to some tax functions such as filing returns. As of today, we have a very strong controls that exist that allow us in real time at the moment of filing to check whether the VAT on inputs declared by a taxpayer are not correct or whether they are fraudulent. We can detect that in real time. So we also have some controls related to VAT reverse charge. We have controls related to VAT retained by the government, so we can check with government system whether VAT declared by taxpayer as being retained by government has been that VAT has been effectively retained by a government entity. So in general, I would say since the introduction of the electronic invoicing system, our capacity to build a richer and more effective risk-based compliance improvement program has grown. We've had more risk rules created based on the data that we are collecting through that EBM program. So I think in a nutshell, being mindful of the time, that's what I would say about how technology has driven our implementation and our VAT implementation and compliance to date.
Thank you very much, Mr. Jean-Louis. I pardon me because I didn't ask you your quick thoughts on Mr. Zake's presentation. I realized I asked our previous two discussants. I pardon me for that. Please give us your quick thoughts on Mr. Zake's presentation now that he was your teacher.
As usual, Mr. Zake he has a masterful presentation of the TADAT framework as a tool for implementing best practices in all tax administrations, a neutral tool really, but through all the 9 POAs, one comes to the understanding of how a tax administration can be really improve on its efficiency and operations. But one thing that is a key takeaway that I have from today's presentation is the crucial importance of not having a silo approach in applying the implementation of the recommendations that come from the TADAT framework. It's actually very crucial to take a broad approach, to look at all the POAs, because there are interactions between them, and missing on one may actually have a negative impact on the other. So it's very crucial to do it simultaneously and to make sure that we have an equal footing and we grow steadily on all fronts at the same time. So I think that would be my key takeaway. And as I speak today, we are currently in an exercise internally here within Rwanda Revenue Authority of doing an internal assessment against the TADAT. So we look forward to sharing maybe this information with the TADAT when we soon invite them for an external assessment from the Secretariat. Thank you.
Thank you, Jean-Louis. I want us to cross over to our neighbors in Tanzania, Mr. Swalehe Biarugaba. Hujambo and good morning from Nairobi. How are you, sir?
Good morning, madam. Good morning, the moderator. We are quite fine in Tanzania. Thank you very much for inviting us, Tanzania Revenue Authority, to join this big summit. First, allow me to express the appreciation of the Commissioner General for inviting the Tanzania Revenue Authority to be one of the panelists in this big annual tax summit of 8th. Yeah.
Quick question, Mr. Swalehe.
Yes.
I want to hear what is your takeout from Mr. Zake's presentation, and then I will ask you about VAT compliance in Tanzania.
Thank you, moderator. I've actually taken a lot from Mr. Justin Zake, but to make it summary, I have realized that whatever we think to modulate our revenue authorities, we should also take the consideration that we need to change ourselves, because having a good plan, having a good setup does not be enough. We need to change in mind and on approaches on how to save the taxpayer, because the question of Mr. Zaki is that is really is really in whatever we want to do, are we ready to implement it? So we need to change in our mind to ensure that what actually we need to do is really what actually our mind focus on that. And also the idea of digitalization is good, but we need also to be ready to implement it so that it can bring a good change. But lastly is on the issue of importance of risk. Analyzing of the risk of the institution is very crucial, so that you can understand what is the risk facing your organization and how to come up with a mitigation on how to overcome those risks. In summary, those are 3 areas I've analyzed from Mr. Justin Zake, the TADAT Secretariat.
Indeed, I agree with you. It was a very rich presentation. But I want us to focus a little bit on Tanzania. I would like you, Mr. Swalehe, to share with us what is the experience of technology-driven VAT implementation and compliance in Tanzania. We've heard from Kenya, we've heard from Rwanda, we are itching to hear from Tanzania.
Thank you very much. As regard to VAT, Tanzania, we have passed on almost 4 phases in the administration of VAT. As you are all aware that we started in 1997 by introducing the VAT. By then it was a manual-based operations, but later on 2010, we went to the second phase whereby we introduced the electronic physical devices. These EFDs was meant to ensure that at least we capture for VAT VAT registered traders to be in the position to know what is actually the sales. But this actually it wasn't did well because it was capturing the sales without taking into consideration on how to monitor the purchase or the production. With those challenges, now we moved to a semi-automation where we started linkaging with importations with ANSYS to ensure that we monitor the importations and also we monitor the production of those products. So by introducing the we enhanced the electronic physical devices by introducing the QR code on tax invoices. The QR code helped us first to verify the genuineness of the tax invoices, and also help the traders to be in the position, help the consumers to know whether the receipt, the tax invoice they have given is real valid tax invoices. So by the means of putting in a QR code, we managed at least to enhance the efficiency of VAT to around 25 to 26 enhancement to contribute to total revenue. But now we are in the fourth phase where we have introduced the full-fledged e-filing. That's the VAT returns are now submitted along with other returns electronically. And, the system we have now is able to validate all the tax invoices which are submitted to support the input tax, whether genuine or not. And for those who are not genuine, are rejected with the systems. The introduction of enhanced e-filing system has helped very much the Tanzania Revenue Authority to improve the VAT performance. And for last year, and for the end of the last year, now the VAT contribution has increased to 30% to contribute to the revenue. So you can see that the improvement, leave alone the challenge that we are facing, but the digitalization, the improvement in the system has helped much in the enhancement of VAT.
Thank you, Mr. Swalehe, for sharing the Tanzanian experience and the improvements and the implementation of the same, and how the VAT compliance has been enhanced thanks to the various systems that you have put in place. Panelists, and our keynote address, we have been engaging with our audiences who have been sending numerous Q&As. So allow us to listen to what the audience is asking so that we can respond to their questions. And I take the first question for you, Mr. Zake. And the person asks, what strategies would Dr. Zake, you have been baptized a doctor. What strategies, but you speak like a doctor, Mr. Zake. All right. So what strategies would Dr. Zake recommend for adoption to gain and or maintain taxpayer customer buy-in to compliance? Then they say, granted, there has been a documented increase in voluntary compliance. So bringing the aspect of the customer buy-in.
Thank you very much, Wageni, and thanks for the baptism, not of fire, but I mean, I've been scanning through the chat, and I've seen this particular issue. Yes, we have processes and procedures. We have metrics that measure whether we have achieved or not, whether we are highly rated or low rated. What is missing in all this? And if you recall my last bullet point on the summary, co-creation. And co-creation goes very, very far. That consult, consult, consult. If you want Jojo all the time. That's critical, because we may sit in our own premises and send our staff out there to interact with the customers, and Director Mukesh, others call them clients. Taxpayers, clients, customers, and they provide you some feedback. And then we hold these workshops and call people in. You recall I said that in the environments that we work in, we have these grapevines. And the grapevines are actually much more informative than these formal sessions that we hold. When I was in the tax administration in Uganda, then I was Deputy Commissioner General then, I had a network of persons who would fan out there. So I get the official version from my staff, and then I have this other network that is also feeding me. And then I do a correlation. Very, very interesting. And it meant that out there was a parallel system that has its own messaging with respect to the management of the tax regime or the system of tax administration. And then we have the official version in reports and so on and so forth. And when you look at the two, they actually don't rhyme. And it's extremely important to have this correlation, because whenever I got this, it wasn't informal, it was structured. It looked informal, but whenever I got this other side, that was not the formal one, I would marry the two and say, okay, so what's going on? And that helped direct the way we should respond to the customers, the clients. In fact, in one instance, actually it wasn't one instance, and I think the practice is still being followed in the Uganda Revenue Authority, we had a 1-hour session every Wednesday, 1 hour, 1.5 hours, with zoned taxpayer areas. And I would go in. In some instances, staff were being accused of very many things. So I would actually go with those staff and say, okay, you're being accused of this, talk about it. And by the time we finished, we had established a rapport, we had established goodwill, we even established channels of follow-up and feedback, not only from the taxpayers, but also from the staff. We were engaged with this person, this was the issue, how has it been resolved? I mean, go through the chat and you'll see people saying, Rispa, this is not working. You explain this, what do you mean? And things like that. It's so important that this co-creation occurs. And I'm a Scrum person, okay? Those of you who know Scrum, prototype, step at a time, make sure it works, consult. People will tell you, yes, it's working or it's not working. So you introduce a bigger product in small chunks or bites, module by module. Co-creation has done a lot. And to the issue of, the chat was saying internal standards within KRA. Director Mukesh, I agree. All these performance contracts, I know RISPA has and Wageni has, and all these other people have all these contracts. Who monitors those? You may monitor them informally, But do we have a system that monitors those and knowing that the outcomes expected of RISPA, of Commissioner General Wageni and others, are actually being monitored formally and also informally? You get this feedback. Oh, yes. RISPA knows, I'm sure your staff have given you a paper on TADAT linkages. That TADAT linkages thing, I mean, you're able to see what interacts with what and how it impacts the other, both directly and indirectly. And you're able to say, this one is not working. For example, I'm just going to give an example of myself, that I'm working in Kenya Revenue Authority, and I have 10 functional areas that I am supervising, but I'm reporting to myself. Oh yes, you go and check. I'm reporting to myself. So who am I accounting to? Am I according to the performance contract? And I know that the data metrics are in that performance contract as well. Or is there another feedback loop that can be used to ensure that I'm actually performing and not just reporting to myself? If I have 10 functional areas and I'm reporting to myself, then that becomes an issue. Yes, performance contract I'll fulfill, no problem. So co-creation, jojoing, the chat is very rich. I'll stop.
Jojoing is the word for the day. Thank you, Mr. Zake. Taxpayers, customers, clients, whatever we call them, I think that's what you're saying. The point is that we should balance both the formal and informal interactions and then derive a conclusion from that. But I want to bring in Director Mukesh Chandra. I have a question for you from our delegates, and they ask, Teams is meant to increase efficiency, which is reduced costs of tax collection. Do we then look forward to a reduction in the VAT rate owing to that efficiency? Very direct question.
Thank you, Wageni. I think that there are two parts to that. One is the efficiency side. And if I can expand that a little bit to say, the efficiency is not only in the mechanics of filing, but also in terms of collection of what is due. And I would just like to share what we have seen in the Revenue Authority. You will have heard of missing traders. And it's something I'd like to just briefly touch on, that in the ETR system, taxpayers, certain unscrupulous taxpayers, if I can say, found ways of generating fictitious invoices without supply of any underlying goods or services. And unfortunately, other taxpayers were taking those on and claiming as inputs. And underlying all of that, there were no transactions. Now, that was effectively creating false inputs and therefore understating revenue collection. If that kind of mischief is overcome, and as I mentioned, if the tax gap is narrowed, we could collect another 300 billion of taxes in a year. Now, with enhanced revenue collection, I think the government and the National Treasury then has more scope of considering whether taxes can come down or whether taxes can be spread wider. If the pot is big enough, then there are all the opportunities of considering from a national perspective, and of course this is the preserve of the National Treasury, on whether there should be some tax rate reductions. So the efficiency and enhanced collection could create a foundation or a platform for tax rationalization. And you have seen in other parts of the world, and it's obviously the wish and desire of every taxpayer to bring down the tax rates. In other parts of the world, through increased efficiency, they have done that in some measure. If we can continue working on efficiency and with the collaboration, and as Justin says, co-creation, where the civic responsibility of paying taxes is fully appreciated, and we avoid the tax frauds, we could create sufficient revenue generation to possibly create the environment for tax rationalization. Thank you, Vageni. You're on mute, Vageni.
Sorry, sorry for that. Thanks, Director, for clarifying. I will say thank you for clarifying that it's not a linear activity, that there are actually very many dynamics and components for that decision to be derived. So thank you for addressing that so succinctly. Allow me to bring in Commissioner Rispa, and you have a question. And the question, so the person says, my question is based on the fact that the economy is truncated with a huge part on the cash economy, which is the informal sector, they put it into brackets, and these businesses lack of visibility of business activity. What are the legal policy and analytics that have been put in place to include them? I think the questioner is asking the businesses that we have perhaps no sight of, quote unquote, what is being done to bring them to the fore. I think that's what the question is about. For you, Madam Rispa.
Thank you again, and thank you for the question. I would say sometimes we look at that as an elephant in the room, and noting that it is really not an issue that is unique to Kenya. For those who are there, even in the last Tax Summit, I think last year or the other year, we did bring in panelists from jurisdictions where we thought they have actually hacked it, managed to address that issue of what we call informal sector, because to be honest, sometimes there's a very thin line between what is truly informal and what is not informal. So then you're left to, a number of people will be left with their devices to define what even that informal sector is. Is it that it's not a business establishment with brick and mortar? It's not an employee or sole proprietorship. What is that informal sector? But coming back to the question, I think it's more about, as it is now, we are looking at widening the tax base. A big issue as far as our corporate plan is concerned. And what we see is that when you widen the tax base, then it means ideally, much as the director said here, that yes, it's not linear. You cannot say I'm putting this in and the outcome is obviously the other, but we're looking at a place where we widen the tax base and bring in more people into the tax base. And when we widen that, then it means the load on those already paying taxes then reduces. And I think that is the ideal. So different ways of widening this tax base. We are aware of the fact that a number of businesses have actually moved from brick and mortar, which is the traditional way of doing business, to the digital space. Getting into that digital space, again, part of widening the tax base. Looking at system enhancements to be able to reach more people, again, widening the tax base. But again, going back to the earlier point that was mentioned, is that we truly believe there are a number of taxpayers out there who truly want to honor their civic duty of paying taxes. That truly is our belief. And that is why in some instances, and I think I've actually flipped through the charts, and I see some saying, we want to pay, we want to get this information. And even without getting to that question, just to answer, I think there are 2 or 3 questions around that, saying that if you can access our iTax, if you can access our website, there's a lot of information that you can get there. And there are very many channels. I think the contacts are put there on, if you want something more, what else can we do to facilitate you? And even as we're going into this digital space, we are trying to simplify it further, not just looking at the big businesses, but then there are the big businesses. And again, even looking at the relationship management model, our model is in such a way that, yes, we cater for the big, we cater for the medium, and we cater for the small,
and you cater for the micro. So trying to have an approach where you accommodate everybody. Now, stepping back again and looking at the bit of just addressing the same thing of informal and bringing more people into the bracket, is that the compliance, I think most tax administrations strive to mobilize revenue through voluntary compliance. That to me is ideal. And all we do is sit and facilitate you to do that. And you'll be surprised, and I mean, pleasantly surprised, and I think Director Mukesh alluded to that earlier, that as we measure the level of voluntary compliance, 92% are actually voluntarily complying. So perhaps a small bit, 8 to 10%, where I like sometimes loosely saying that maybe can't pay, won't pay, catch me if you can. So it's a small group, but again, also use a lot of effort in trying to bring those onto the bracket. So what are we doing as part of our tax-based expansion? Sensitization, sensitization, sensitization. Awareness creation, engaging our taxpayers, preparing, putting in place platforms, saying that we are here to be reached. And as it is now, moving towards that service delivery, I've also seen some concerns of questions being asked over and over again. And I think for me, the assurance on my own behalf, on behalf of senior management, and even the board, is just to reassure our taxpayers that our intention, our plan is, as we move from an authority to a service, is to facilitate, reach out. We are here to facilitate. We are here to simplify and make it easier for you to interact with us. And in doing that, as we're passing out this information, then we're able to reach more. This then again goes back to the thing of leaving no one behind, carrying everyone along. Again, also in the chat, I noticed someone saying that all those who should pay, so that then our country becomes self-sustaining. Because really that's everyone's dream. And as you're doing that, as you're delivering on your service, on your duty, on your civic duty of paying taxes, we bring in more people. Where you have information to give us on some of these people, who then can we reach? How can they be facilitated? There are various channels as to how we can do this, but we are approaching this to tax-based expansion and very many things. That is our intention, and we are always open to feedback. What else can we do better? And in some cases, and I think also Sazake alluded to it, that sometimes you sit here in a tower and believe what I'm doing is a perfect way. But you can't keep doing the same thing and it's not giving you the right results. And you still say, let me still continue. Probably down the road it will work. No, we change our way of working. We do not have the monopoly of answers. And that's why we are open to listen, to engage, and hopefully do even much better. Thank you.
Thank you, Commissioner Rispa. You know, we could listen to you all day. And thank you for helping us circle back to what Mr. Zake, I see you, Director, what Mr. Zake called the risk approach differentiation, where we have the high-risk taxpayers, medium-risk taxpayers, we have the key taxpayers, and the low-risk taxpayers. Jean-Louis and Swalehe, I have a question for you, but before I get to you, may I please just listen to Director Mukesh, and then I share with you your question from the members. Go ahead, Director.
Thank you again. I think just to reinforce what Rispa has said, the engagement, the levels of engagement have increased significantly in the last 3 or 4 years. There's a very strong message, I can assure taxpayers, from the board to management, that we have to engage with taxpayers in a collaborative manner, understand their issues, and then help find solutions to that within the framework of the law. We must always remember that the law is very clear. There are certain things you can do, and there are certain things you can't do. Quite often, and I see on the chat a lot of complaints about unable to reach officers, responses not coming back in time. It's a problem that we are all fully cognizant of and driving very hard for the culture to change. And there has been a big shift in the culture. And one thing that, one big step that took place about a year and a half ago, we now have the iWhistle platform, and taxpayers are encouraged to report any instances of improper behavior by officers or indeed taxpayers through the iWhistle platform. It's totally anonymous if you choose to be anonymous, and if you choose to state who you are, that's also possible. But then anonymity is assured. And we have seen in the last 18 months, very many cases been reported of taxpayer non-compliance, and then the teams are able to follow those up. And also staff improper behavior with taxpayers. And there is a mechanism within KRA to investigate all of those and take appropriate action. And that is happening. So taxpayers our customers are encouraged. Where do you find a challenge there? Use the platform on reporting. If, on the other hand, responses are not coming through, you can also escalate it to various levels within the organization. And please do that. It'll help our engagement. And there is a big thrust on improving engagement and communication, and that will continue. Thank you.
Thank you, Director, for that, for just giving us the 360 view of what KRA is doing in terms of compliance, both internally and externally. I'd like to bring in Jean-Louis. I look at my time and, oh, it's fast spent, but I need to hear Jean-Louis and Mr. Swalehe. There's a question for the two of you, and as I bring you on board for that question, I'm informed that there's a delegation from Zambia that is joining in, and so Zambians, hello, habari zenyu. That's the Swahili way of saying, how are you today? And thank you so much for joining us. To you, Mr. Jean-Louis and Mr. Swalehe, here's a question. It is so costly to acquire and service ETRs and is a factor of non-compliance. How has Rwanda and Tanzania managed this and share learnings on their implementation? I don't know whether, Swalehe, you want to go first, and then Jean-Louis?
Yeah, thank you very much, the moderator Wangeni, for this question. It's really a cost for electronic physical devices to the taxpayer. We really understand it, but as I already said, that it's a very useful tool to both the taxpayer and the authority as regard to keep on the proper information records. Now, to take into consideration the issue of cost, Tanzania Revenue Authority is now moving from the physical devices to virtual devices, whereby we have enhanced the electronic filing system to allow the use of laptops, mobile phones, with smartphones, and the other devices which are ready which are compatible to the individual systems to use for a recording of the sales. For example, now the petrol stations, they are no longer in using the physical device, which is very expensive. They have to join their systems with the computers to ensure that they issue the physical receipts. We have introduced such system also to supermarkets, and now we are moving to small traders, whereby they will be simply having their simple systems, but join to their smartphones and the computers to be able to record their sales and issue the tax invoice. So by doing so, we'll be refraining from the increasing the cost. We'll be reducing the cost for compliance for taxpayer to use the physical to use the system account for their sales. So I'm sure in no time the taxpayer will be free from the high cost of using that system, and for sure the cost will be minimized to the high extent. Thank you, Madam.
Okay, thank you for sharing the Tanzanian experience. Mr. Jean-Louis, how have you managed costs of implementation of the ETR, but you call it BDM in Rwanda?
EBM, thank you very much.
EBM. EBM.
Exactly. So when we started this program, as I said, back in 2013, we envisioned EBM to be a device that comes with a certain form of firmware that is a program which is embedded into its physical elements. And as a consequence, of course, that was a very difficult situation for us, though it helped a lot and it increased actually the VAT collections by at least a marginal 4%. At least it was very complicated to update those solutions. So we moved on from a hardware-based to a software-based solution, which is our second version of EBM. And that one came after we had recognized that there's not a one size that fits all kind of solution to this issue. Our taxpayer segments are very different in terms of revenue, capabilities. So we decided to offer a wide range of solutions that essentially constitute electronic invoicing systems. But mostly we moved from, the big shift was to go from hardware to software. And those flavors, of solutions, if I can summarize them, was we offered a version of a software that works as an invoicing system, which includes in itself a sales data controller, which sends us all the information. It sends information to the tax administration. We offered it as a software that could be installed on any Android platform. For example, on your smartphone, on any tablet that uses Android. We've got that one. We even started with a software, by the way, before we even moved on to Android, we started with a software that could be installed on a common Windows-based computer, so that we could allow, I would say the great majority of computer users in Rwanda, at least more than 90%, are using Windows-based kind of devices. So we also offered it. All of these were offered for free. That means they were developed and they were offered for free. Now for taxpayers who had their own customized invoicing system, we came with another innovative solution. We offer them a virtual sales data controller, which is a software module that they can install on their premises and which can connect to their invoicing system and send to us the information related to the economic transactions that they are carrying out. We've introduced as a last solution the possibility of an online invoicing system. In other words, we give access, we give credentials to people to access an online platform where they can create their tax administration recognized invoices. With that, we believe that we have tried to address different kind, but all of this, of course, is offered without any cost. The only cost comes at the hardware level, because yes, of course, they have to invest some money for their connection. Yes, they have to invest some money for having at least a smartphone, a laptop. But what we've done is, given the fact that our tax base is still relatively very small, we've offered for the first comers at least a huge number of point of sale devices, which are small tablets with the Android operating system, which already have the solution on it. So we believe that by doing that, though we may not have covered all the potential users of the invoicing system, we believe that we've covered the most probable to enter, those who are most probably going to enter into our VAT net, because we did some analytics before that, and we selected, of course, as a priority among the non-VAT registered taxpayers. I have to say that for all the VAT registered taxpayers, they had the economic muscle, the financial muscle to provide for themselves devices. But for the small ones, that's where the pain is felt. We distributed devices, point of sale devices, and it's been a good success until now. We are looking forward to seeing the kind of analytics we are going to develop, and that will help us to improve on our VAT compliance program. I'm trying to address only the issue of price here, but I think that gives you an overview of what we did. Thank you.
Yes, it does, Mr. Jean-Louis. And as you can see, it has elicited a lot of questions. And I wish we had a lot of time to just dissect just how that framework really worked. Because cost at the end of the day has to be borne by someone somewhere. But because in the interest of time, we don't have the time to. And I see Mr. Swalehe's hand is up. So allow me, lady and gent, to bring this session to a fantastic close, but I will ask as we close, we're going to go around. Mr. Swalehe, we're going to start with you, so don't worry, please hold your comment. We're going to go round, and I would want you, as your parting shot, to share with us what your revenue prospects are post-implementation of the technology for VAT compliance from each of your countries. And of course, we would like to hear from Mr. Zake his overall parting shot. So I'm going to start with you, Mr. Swalehe, and then I will go to Mr. Jean-Louis, and we shall go and finish with Mr. Zake. Then after, we'll take a screen grab, and our session will come to a beautiful close. Mr. Swalehe, to your question or comment first, and then you let us know what revenue prospects TRA is projecting post-implementation, 100% implementation of the technology.
Yeah, thank you very much for the question. And in fact, the interest of the government is to see that the VAT has the topest contributors to the revenue. As already said, that now we are 30%, but we think it should be the leading one in top of other tax sources. Yeah, and, in fact, we are as now we are moving. Our interest is that to see that the taxpayer themselves, they feel free to file their returns. The minimum time to spend toward the filing should be minimized to the large extent. And in fact, the challenges which they are complaining in terms of rates, in terms of number of thresholds, all of this as the government is keen to address those problems. Yeah, and now we are improving improving our systems to ensure that the current the real monitoring of the taxpayer rates is really on a really time. We now focusing to integrate the TANSIS, the system of importation, toward the EFDMS, so that whatever the importation is done is reflecting in our EFDMS, so that we can have a control on the importations. As we all know, the VAT work on the principle of output inputs. So if you are unable to monitor the inputs, it definitely won't be able to succeed on output. So our mission as an authority is to ensure that we have a strong system that will capture all the importations of the trader, and all the manufactured products should also be captured, so that whenever items as produced or manufactured or imported are in the database of the Tanzania Revenue Authority. By doing so, we'll be on the position. We think that by doing so, we'll be on the position to ensure that taxpayers are comfortable in complying with the VAT, and the government itself is well equipped to ensure that whatever is required to be collected is collected. Thank you.
Okay, thank you, Mr. Swalehe. I was looking for some revenue prospects, but I think you've covered it well. Let me ask Rwanda, Mr. Jean-Louis, what are your revenue prospects post-implementation of EBM?
Well, as I said, I did mention a bit that the most recent study that we had shown a bump in the marginal bump created by the introduction, equivalent to approximately 12% of the revenue collected. So probably like in most EAC countries, our VAT contribution to the total envelope of tax collected is around 32-33% yearly, year on year. And what I want to say here is we have to keep in mind that technology doesn't answer all. Tax administration doesn't answer all. There's also the policy side, which we did not cover very much here in our discussion. So in terms of policies, maybe if I can quickly brush on that, we're looking at introducing a program called the VAT rebate program, which is an incentive program basically, in which we were going to, probably you're most aware of it, most of you, in which we're going to give back a certain percentage, approximately 10% of the VAT collected, back to the consumer who actually pays that VAT, as a way of incentivizing them to ask for invoices when they go and carry out transactions in a shop. So why do we do that? It's because we want to spur that culture change that we've heard of. Some of the challenges that we are meeting in the implementation of the EBM program, which we did not touch here, cover the lack of adoption, the real adoption, that is not only using the EBM invoices, but actually inputting the truthful information on the invoice. Issues of underpricing exist. Issue of non-issuing the invoices themselves exist. So I guess our colleagues in Kenya or in Tanzania will feel like I'm speaking their mind, because it's a reality. We're human beings. Behaviors in Rwanda will certainly be the same in any other country that has a similar situation. So what are our prospects? We want to introduce the VAT rebate program. We want to extend VAT on digital and online services, following the example of Kenya. So we are currently very much engaged with ATAF on a study to see what would be the impact of such a move, policy side. So another part include the improvement of our validation controls. I just brushed a bit quickly at the beginning, but what some of the controls that we want to introduce will go at the level of the items within an invoice. To this date, though we have a real-time control of the truthfulness or genuineness of an invoice when it's declared as an input, or whether on the side of the output when it's omitted as part of the output as a way of reducing the net VAT to be paid. Still, let's say a construction company that produces a genuine invoice that contains only items related to food, like rice. They bought sacks of rice. How do sacks of rice intervene as input in a construction company? There are certain correlations which do not make a lot of sense depending on the kind of industry we're dealing with. So we intend to introduce machine learning and artificial intelligence as tools to improve on our analytics at the item level, and being able, within the context of a given invoice, to tell to a certain taxpayer that some inputs that they've declared need to be justified. Not that they are necessarily wrong, but at least we need to come to a common ground and understanding. So we are building we're currently building that kind of program where we would have our controls, not at the invoice level only, but even within the invoice at item level. So what will be the consequence of that? I believe a huge growth, first of all, in the number of invoices that we are collecting. So if we refer to the examples that we've seen from other countries, similar economies, one country in particular that had spurred actually the introduction of the VAT rebate for Rwanda was Mongolia, where they were introducing that program for themselves. They observed approximately a tripling of the number of invoices which were collecting on a monthly basis. So, of course, by widening that overview, that the net of invoices that we are collecting, the information that we are receiving, because now people start asking for those invoices to the sellers. So we believe that, I'm not going to say that there will be a direct proportionality of tripling the VAT, but we do believe that there will be a subsequent bump in an increase of VAT generated. But remember that all of that is we have to take into account the 10% of the VAT collected that we have to give back to our citizens for their participation. Now, that program is only applicable to business to consumer operations, not to business to business, of course, because those are already incentivized by the document that already exists. Now, we are trying to put so many things in 2 minutes, but I hope I didn't take too much time. In a nutshell, I'm not really able to put in numbers how the bump will be, but we are very, very, very optimistic in seeing that these measures, both the policy and the administrative measures, are going certainly to increase our VAT envelope collected every month. Thank you very much.
Actually, Mr. Jean-Louis, I wish we had more time. We'd discuss the incentivizing program that RRA has, because from what you're saying, there's a lot of incentives that you have put in place. It would have been great to hear whether those have worked and at what cost. But maybe that's going to be a conversation for another day. But thank you so much for sharing your prospects. I want to come to Kenya, come back home and ask Madam Rispa. What post TIMS, the tax invoice management system, what prospects, what revenue prospects are we looking at? And then Director Mukesh will share with us his parting shot on the general future. Madam Rispa?
Thank you again. As it is now, we are doing about 26.3 to 27 to the total tax envelope. And when I hear our colleagues on the call talking about 30 something, I'm challenged at the same time, wowed. And I do believe it is something we are capable of doing. Right now, VAT, when you're looking at it to the share of GDP, about 4% or slightly below. And so with this bump, we are looking at 6%, and borrowing also from Rwanda. Because what I believe is that even as African countries, we have a lot of capability just amongst ourselves, borrowing and reading from each other what our neighbors across are doing. Starting right from East Africa, there's a lot of potential, a lot of information that we can borrow from each other. Going back to the keynote speech of not working in silos, not just even as amongst ourselves, even as a country, borrowing best practice from others. So Rwanda has been here. We have been planning to visit as well. And just to say that you might be here thinking that in your small cocoon, you're doing perfectly well, but your neighbor next door has already done it, has made the mistakes, and is willing to help you skip the mistake and get to the doing bit. So that is what we are really looking forward to, getting onto the 30s of a contribution to the total tax envelope. And as it is now, if there's one tax head that every single person is paying, is VAT, even to a small child on the products that are not exempt. Everybody is incurring VAT. So why then shouldn't it be the tax head that performs the best? So that again remains a challenge to us. And in looking at this, and maybe it goes back to an earlier comment that was made by Mr. Zake on interlinkages, that something from Rwanda, a comment that said, you may have a small base, but the VAT is working very well. So again, interlinkages goes back to cleaning the tax register. What then does it give you? Quality output. So there's so many things that interlink. Zaki, I've gone back to class and you can see it's working well. So yeah. So
you're a good student, Madam Commissioner.
I have to prove to the teacher, to the professor that it worked. So the comments have come through, the concerns have come through. We've taken them graciously. We are taking the challenge graciously, but we do hope that then we'll get to that level our neighbors are talking about. The comment again from Rwanda, I think it sounds like what we had also thought about. A number of jurisdictions call it, I think, tax lottery. It's a lottery program. Yes, that one, as an incentive. So again, even as we're getting to your level of EBM through our teams, you never know, we'll be looking out to borrow on what are the mistakes that you have made and how can we then navigate through that. But I think to sum it all is that it can be done. We believe it will be done. And not just being one-sided, working together with our taxpayers, our clients, and
I think from a facilitative approach, and maybe just as I probably exit the stage at this point, is just to say certain things in life, as I always say, are, inevitable. Death and taxes. Change is imminent, right? So death and taxes is a must. Tough job, someone has to do it. We are the ones to do it, and we are doing it very graciously. And more importantly, change is imminent, and those who think it cannot be done should then get out of the way of those already doing it. Thank you.
What a way to punch it. Thank you, Madam Commissioner. I appreciated that. Okay, let's wrap this up with Director Mukesh. Give us the overview. What does the future look like for KRA?
Thank you again. The future, I think, if I say it's very bright, I would say it's very bright for the nation in terms of, we've transitioned recently through elections and so on in a very peaceful manner. And I think that has inspired a tremendous amount of confidence. So the future for our nation is bright. Global economic situations impact everybody. But I think if we put our minds to it, we'll go a long way. As far as KRA is concerned, I think the journey on service has started in a very earnest manner, and that will continue. And that delivery of service is also anchored on automation, on making it easier to do what is required for taxpayers to file and be compliant. I think the other comment I would add is you can see now in textbooks in schools, there's reference to tax. The civic responsibility of tax, of individuals to pay tax is beginning to be brought about in our education system. And that's very important. And you'll see in various textbooks, there is reference to why you should pay tax. And I think that starting at that level is very important. There's a soft side that we must come back to always. There's the hard side of filing compliance, but the soft side is listening to taxpayers and communicating effectively. And that's a journey, and it's an ongoing journey. And the more we can do in that regard, I believe the authority will be able to collect more and have more satisfied customers. As regards kind of the automation, TIMS is now very much in process. As Rispa mentioned, 35,000 customers have implemented. More will continue by the end of this year. But there is work going on also to make it easier to use a web-based system eventually, or an app system. So there's work going on to develop those as we move along. And finally, also there's work going on to bring in more taxpayers. If you look at the National Bureau of Statistics, it says we have 18 to 20 million employed people. We have 6.5 million PINs. So there's a gap there. And we need to narrow that gap in terms of employed people as per the National Bureau of Statistics to the ones on the KRA register. So there's work going on to encourage the informal sector to become part of the tax-paying community. So with all that work going on, the future is bright. Thank you.
The future is bright. Thank you, Director Mukesh Chandra. And finally, but definitely not the least, allow me to bring our keynote speaker for this session, Mr. Justin Zake. What have you heard? What is your final parting shot and perhaps your final challenge? Because I can see it. I know you want to throw one at us and we're ready for it.
I'm not going to punch such as Rispa did, but I can agree with Director Mukesh that the future is actually bright. It's how we take it, how we use those opportunities. That's most important. I've heard Tanzania and Rwanda have done things. Please, let us not reinvent the wheel. They've done these things, they've been there. So what if, I'm just being a little bit provocative here, what if Kenya Revenue Authority takes a segment of their taxpayers and introduces some of the things that Rwanda and Tanzania have done? Just a segment, pilot it. I told you I'm a Scrum person. Pilot it and see how it can be rolled out. We don't need to wait for years to get these things done. No, let's not reinvent the wheel. Sometimes, as the auditors general tell us, we have negatory expenditure. So we go out and source this $1 million system when something has been done for $20,000. Even in my work, I've seen that happen. Somebody asks for millions and I say, sorry, I can do it for 50,000. Come on, let's not reinvent the wheel. People have done things. How can we leverage on them, but avoid the bad habits? You know, so that's one. This has been an intensively rich discussion. We've now started co-creating. If you look at the chat and the people who are on there, 2,400 people, we're having a conversation. And at the end of the day, I'm just thinking widely or broadly, why can't we have this kind of platform? Okay, this is a summit. Why can't we have a continuous conversation on a particular platform like this? Within KRA, within Kenya, across the region? You know, what about globally? I can give you an example that, you know, my secretariat has only 5 people, only. But we have a global reach of about to about 5,000 others, including Kenya Revenue Authority. And we have created a platform, a community of practice. So, Director Mukesh, why can't we have a community of customers who can come back to us continuously? The chat is filling up. There are issues, and we can respond very, very easily. So for me, that would be, you know, the second issue. The third one, let's minimize intra-agency, intra-tax administration discordance. Minimize it. Let's collaborate more. Let's support each other more. When I see a RISPA, you know, doing something and I feel it's not right, I should be free to tell RISPA, I think we could do something different. And RISPA would be responsive to this. Jean-Louis. So let's not reinvent the wheel. How can we have this conversation continuously on a platform, customer platform? And at the end of the day, associate, collaborate, and not compete with each other. Well, again, you've done a wonderful job. Wonderful job of moderating. And I thank you very much. I thank you all as organizers for inviting me, even though you didn't expect me, but I've been here. So I'll hand back to you. Thank you very much.
Thank you, Mr. Zake. You know, we started this conversation when we called you Mr. Then in between, you were baptized to Doctor. And then when we finished, Commissioner RISPA called you Professor. So I think we'll stick with Professor Zake. Thank you for the challenge. And just reminding us at the end of the day, we need to move from competition, whether healthy or unhealthy, to collaboration and eventually co-creation. Ladies and gentlemen, man, this has been an amazing, amazing conversation. Unfortunately, we need to wrap up because we have our next discussants who are waiting to unpack the next topic. But before you leave, may I request that all our panelists, our discussants for the day, our keynote address, Mr. Zake, our Commissioner General for the Kenya Revenue Authority, and Mr. Ambassador Dr. Francis Mudhaura, our KRA Chairman, to please put their videos on so that we can do a screen grab. The media team will be leading us in taking the screen grab once I see all the very handsome and beautiful faces on my screen. Great to see you, the director. Yes, I can see CG and I can see Ambassador, I'm not sure I can see. All right. I think we can take. Okay, if you can see me, please wave so that they can know that. All right, there you are. Okay, thank you very much. And I think you can look directly into your camera and smile as we take the screen grab. Excellent, there we go. All right, so thank you very much. That was session one. We had about close to 2,400 participants. We are taking a coffee break. It is important for all of us. So just 2 minutes coffee break. Do not go anywhere. We're coming back with the conversation. We were talking about enhancing risk-based compliance through technology. Now we move on and discuss through data. Data is the new gold. So how are we implementing? You want to stay here with us? We'll be back after you grab your cup of tea. I have mine here, and then we'll be back in about 2 minutes or so.
I would like to assure you that KRA is committed to listening to our customers. You know, today I had a new word of brand obsession. Customer what? Obsession. And I asked myself whether my customers I'm going to be, am I the one to be obsessed with the taxpayers? It was quite a new terminology. And I saw that, you know, while it is easy to sell goods and services and be obsessed, like we are all obsessed with our phones and the internet and social media, because that is truly obsession. We need to make sure, I hear there is a country, is it Sweden? I think so, where taxpayers are actually obsessed with the tax authority. They love it. They always rate it as number one. Year in, year out. So it is possible to do so.
The paying of taxes by all of us is not an option. It is not something we choose. It is something we must do if we have to secure our independence and our democracy.
As a nation, we are able to meet our sustainable development goals because of taxpayers' hard work and their thoughtful efforts in being tax compliant.
Taxpayers remain our most valued customers. We continue our journey of simplifying tax procedures through the use of technology, including enhancement of the iTax portal. KRA's customer satisfaction journey is also anchored on improved trade facilitation to enhance tax compliance.
Tulipe ushuru tujitegemee.
Tulipe ushuru tujitegemee.
Tulipe ushuru tujitegemee. Yeah.
Tulipe ushuru tujitegemee kwa sababu hiyo ni haki yetu, ni haki ya Mwanakenya. Na lazima tutimize wajibu wetu ili Kenya yetu iendelee.
All right, so welcome back to session 2 of the annual tax summit. What riveting conversations that we had in the morning, talking about technology and risk-based compliance. How do we use technology to enhance risk-based compliance? Esteemed delegates, we are on to our second topic of the day. And right now we're going to have a conversation on data. We've had data and big data as the buzzwords, but how do we use data and big data? How do we use analytics to drive compliance? I'm excited about this panel because we've got 2 gentlemen and 1 lady who are in this particular space, and they're going to be sharing with us their experiences. Ladies and gentlemen, allow me to introduce the discussants of this second topic, still under enhancing risk-based compliance. The first off is our lady, Miss Yvonne Wafula. Miss Yvonne Wafula is the Chief Manager, Corporate Data Office at the Kenya Revenue Authority. Yvonne has over 15 years experience in the implementation and support of tax administration systems. She has been involved in supporting the development of tax administration systems through the translation of business requirements into appropriate technology solutions. And she is passionate about the effective use of technology in achieving business objectives. Our second discussant is Mr. Shadrach Anyuo. Shadrach is the Senior Solutions Architect at Amazon Web Services. And he is responsible for helping customers navigate the digital transformation through adoption of AWS cloud services. He also works with customers to ensure that they adopt best security practices while operating in the cloud. It will be great to hear from Anyuo how we have security with cloud-based solutions. And the final discussant is Mr. Brian Nyangena, who is a scholar at the Institute of Mathematical Sciences at Strathmore University. Now, Brian is a practicing scholar and a teaching fellow at the Institute of Mathematical Sciences, Strathmore University. He is passionate about development, and he is a subject matter expert in data science and machine learning, with experience in statistical and prediction modeling for finance, renewable energy, and agriculture. What a panel we have for you. I'm excited to hear from them. Now, ladies and gentlemen, KRA aims to adopt modern technologies such as artificial intelligence, otherwise known as AI, machine learning, ML, electronic invoicing. I think we had a little bit of that discussion in the previous topic, and blockchain to ease the integration of strategic partners and therefore facilitate acquisition of third-party data to support and enhance tax compliance. To start us off in this discussion, we have none other than Yvonne to take it away as she tells us how KRA is positioning itself in terms of data analytics, machine learning, and artificial intelligence. Good morning, Yvonne, and please go ahead.
Good morning, Wageni, and thank you. Good morning, everyone. The Commissioner General and Commissioners present, the KRA Board Chair, and the directors present, all panelists, colleagues, and distinguished taxpayers on the call this morning. Good morning. It's my honor today to share KRA's journey and learnings in the use of data and analytics to drive tax compliance. The data age, so to speak, brings with it some challenges to tax administrations, and KRA is not an exception to this. So what are the challenges that this age is bringing to us as a tax administration? For one, there is pervasive automation. There are new ways of doing business. Business is becoming more complex, and there's a lot of data that's availed. And with the complexity in business, so does the complexity in taxation grow. As tax administrations, you're looking continually to gain insights from data that's available to us to drive compliance and also improve our performance, get value for the work we do, and target as much as possible to bring in the revenue that you need to bring in as a tax administration. As the data grows, there's always a challenge of how do you manage this data? Do we have the right data? Is it relevant? Is it of the right quality? What are the issues surrounding it? With the growth in use of data, there is upcoming legislation and safeguards around data protection and privacy. How are we as a tax administration addressing these challenges on a day-to-day basis? Because this also opens the risk for litigation in case we are non-compliant. So these are the challenges that as a revenue administration, we are looking at when it comes to the implementation of data and analytics to drive tax compliance. So for the KRA, we have two basic building blocks as we address these issues. One is the capability, the platform, allowing us to use the data that's available. These are the tools, these are technologies surrounding our ability to use this data. A very key building block to us being able to utilize data is the governance. What is the culture of the organization? What are the policies? What are the processes in place? Because governance enables us to unlock or realize the true value of data. So it's not just about the data or the technology, but also the structures surrounding how we can use this data, who can and how we can. So as an organization, we are working on these two fronts to ensure that we unlock the true value of data to drive tax compliance. Our data analytics platform is known as Insight. Our data journey, maybe just to mention, started way back in 2016, and we have been progressively building the capabilities around it. The data platform is not one solution, but more of a mix of, or rather a collection of tools that offer different capabilities, because as we learn with data, there's no one size fits all. Different stakeholder groups have different needs. So whatever platform we implement has to cater for all the varied user groups, from basic users to more advanced users. These are all present in an organization such as ours and other tax administrations. But at the heart of our platform is the data warehouse. There's repository where we collect the data, we collect information, and from there we can build all these capabilities that support or rather help us to drive compliance with data. So as KRA, we have about three broad groups of data products that you're already using. One is the expert risk models, which we build around rules and using experiences of our auditors and seasoned compliance officers to be able to profile taxpayers, score them, determine who is the most appropriate to follow up. As I said, we have to apply a risk-based approach. So we target, or rather seek to get the high value cases, and those are the ones we take to audit. So these expert risk models help us to identify such taxpayers and then apply the necessary compliance efforts in terms of managing our risks. Over and above that, we are also implementing more advanced, I'll call them more advanced models, where we are looking at prediction, we are looking at forecasting, fraud detection. Our business has a lot of risk around it, and so we are building models that can help us even detect these schemes and detect the risk schemes that are present in our business. A very basic capability of a data platform is the ability to provide reports. I think for us, this was a key learning. When you started implementing our data project, we thought we'd go straight to the advanced models, but we learned that we cannot fly before we can crawl or walk. So the data platform that we have also provides us with the necessary reports to support day-to-day operational decisions, coming from the basic operation reports to more tactical and strategic reports, available when and how our various user groups need this. What is very important when implementing a data analytics project, it must be aligned to strategic goals. What do we as an organization seek to achieve? Data is the new gold, data is out there, everyone is speaking about data, but what are we as a tax administration seeking to achieve with the implementation of these products? First and Foremost, we seek to improve tax compliance. So we build products around selection, around risk identification, around fraud detection to drive the compliance. Another objective that we as KRA have, we seek to increase customer satisfaction. So what are we doing about this when implementing the analytics products? We look at automation of, I'll call them SLAs or KPIs to deal with, that have to do with the customer. We must track this so that we are able to offer our customers the right experience, and in so doing, we contribute to the organizational goal of customer satisfaction. As an organization, you also want to improve our effectiveness. We do not want to be caught off guard. We want to know what is likely to happen. Can we predict accurately if there's a change in a rate, for example? How is that likely to affect our revenue? And so we're building models around this, helping us to forecast and predict. And key for us is also to enhance our staff productivity through the consolidation of data. We significantly cut the time needed for analysts and people who deal with reports, the time they need to just collate and collect this information to come up with reports or draw insights. So as part of the data project, we're seeking to enhance our staff productivity. To date, I think we've cut the time that it takes just to collect information by almost 60% in the last 3 years. So we are releasing our staff to do more useful work, quote unquote, which is to explain the numbers and not just to gather the data. So what is it that we seek to do beyond compliance? I think I've talked a lot about compliance, helping us raise revenue, know what to do, address our risks. I think for us, data can also be used to improve our customer experience. For one, we can learn our taxpayers better, segment them for customized services, just by understanding their behavior, knowing how to categorizing better to give them a better experience in terms of education, targeted marketing. You cannot assume that one size fits all. We must be able to understand different segments of our taxpayers and design products in terms of education, in terms of marketing that speak to their need. And we can use analytics to just help us understand our customers better. We're moving on to real and near-time analytics to improve our service delivery. We want our customers to be able, in the future, when they file, for example, a refund claim, we are able to quickly assess the risk and know if this refund can be approved or not. So these are the enhanced capabilities that we as an organization are building around improving our customers' experience. Now, as I spoke earlier, there are two main building blocks when it comes to implementation of data analytics. There's the capability, and very critical is the governance. As an organization, we have a very structured approach in how we manage our data and information assets and the structures surrounding that. We are looking at, based on our business goals, what do we want to achieve? We realize that there are key enablers and also areas that we need to focus on. Some of the key enablers for us is having deliberate structures or I'd say organization structures that deal or address issues to do with data. For example, at the KRA, we have the Data Governance Council. This is a team of senior managers drawn across from all the departments in the authority who are looking at the data landscape. They're looking at the needs moving forward, not just the current ones. What do we as a department, for example, want to achieve in the next 3-4 years? What are the issues you're addressing now? So we're having deliberate conversations on data to do with quality, to do with the staff capacity. And these are discussed at a very high level so that it informs the prioritization of data initiatives by the various stakeholders implementing these things. So we must have those key, I would say, support structures that are looking forward and within, and also helping us to advise investments in data. For us as an organization, we know that data quality and security management is very key. We seek to be a data-driven organization. data being a raw material, we must focus on the quality, how good is it fit for purpose, and the security. For us, also, there's a big push towards improving the data culture in the organization. We found that it's one thing to bring in a technology, bring in a capability, but it's a whole other conversation about having your people move along with you, having your people understand what data can do for them. Yeah, how do I use it? How is it relevant for me? And what is my part in ensuring that we maintain the quality and the trust? Because we know that our staff interact with taxpayers on a day-to-day basis, and they're also contributing to producing the data that we need then to do the analytics. So it's important for our staff and various teams within the organization to understand the role they have to play in ensuring that the data that comes into a system is fit for use and also that can inform decision making. So our focus areas are data quality and management, literacy and culture, and availability. But today I'll just talk about, I'll touch a bit on security and quality, what we as an organization are currently doing. So for us, data quality is not a project, it's a process. It is a continuous activity that we do. And it's two-pronged. We look both forward and backward. Looking forward, you're looking at what are these data requirements that you have and what are the critical data elements. In as much as we have all this data coming in, we have it for our purposes, there are critical data elements that we need to track. So we profile them, we make sure that we are monitoring their quality consistently. And by doing this, you're able to inform even changes that need to be made in how this data comes in, so that at the end of the day, you're not having to address a quality challenge. Because we found out that cleaning or implementing a project that looks backward, which is what we call a data cleaning project, can be very expensive. But in the same vein, there are those issues that must be corrected. So as an organization, we are also looking back. What are these issues that need to be addressed so that we get our data to the right quality? But all in all, for data quality, we've applied a two-pronged approach. You're looking forward, we are able to identify those elements, profile them, monitor them, make sure that they're within acceptable levels of quality, and also look backward. What do we need to correct so that we have an acceptable level of quality? It's critical to understand that data quality is a success factor for analytics. I think our analytics is only as good as the quality of the data that informs it. When it comes to information security, I think for the KRA, this is very critical for us. As an organization, we are certified in ISO 27001, which is an information systems management tool that has several controls that make sure that you're taking care of our information risks. This not only gives assurance to you as taxpayers that you're doing all we can to safeguard our data, but it also helps us as an organization to make sure that we are doing all we need to do to ensure that our information assets are secured. When it comes to our data infrastructure, when I talk about data infrastructure, I'm not only talking about the analytics platform, I'm also talking about the systems, especially the internal systems that are the source systems that provide this data, that feed into the analytics systems. We have implemented secure infrastructure with the necessary redundancies and safeguards around it to make sure that what comes in is protected and is also the right thing that needs to come in. So we take care of all those risks, not just at the analytics platform, but also at the source systems. And as the global trend now is that there's legislation surrounding privacy of personal data. So we, as KRA, we have made deliberate efforts in compliance with the Data Protection Act of 2019, putting safeguards around PII or personal identifiable information. Who can access it? Why? How can they access it? And the safeguards around that, because this is very critical, and it's a compliance effort that we must address as an organization. This gives comfort to our taxpayers also, that your data is not just shared with anyone for marketing purposes and stuff like that. We only collect data for the compliance efforts that we are mandated by the laws to implement. And so it is very important for us to ensure that we are in compliance with the data privacy and protection laws that are in force. So in conclusion, what have we learned in our journey since 2016? I think the first thing for us is in people. The investment in the right skills can never be underscored. It's just as important, if not more important, than technology. The right skills must be available for you to realize true value in data analytics. Governance and culture. We might have the best technology, might have the best people, but if the structures within which we're implementing these products, within which you're utilizing data, is not right, we will never truly realize the potential. So what are the enablers surrounding these capabilities? What are the policies due to put in place? What kind of competencies do we need to build? What kind of culture, where whoever is dealing with data understands that data is an asset and treats it as such? So as an organization, we are doing a lot around governance and culture, just so that we can realize the true potential that data has to offer. Third, and very critical, is scope and alignment. As I said, we might all want to fly before we can walk, but we must put in all the capabilities necessary to support the basic to the advanced users, because in an organization, you'll have a broad spectrum of users and everyone requires data for their work. So we must take care of those needs. And it's very key that whatever data initiative that you implement has to be aligned to organizational goals, because only then will it make sense for you to implement. Thank you, and back to you again.
Thank you very much, Ms. Yvonne Wafula, for just those great insights that you've shared with us. You've talked about data quality, data relevance, is it fit for purpose, the predictability of data, the quality of data, the governance around data. And I just want to bring in Shadrach on this. And based on your experience, Shadrach, how has Africa utilized big data to drive macro policy outcomes? Shadrach, I think you're speaking on mute. Okay, there you are. I can hear you.
Yeah, thank you. Thank you, Ngeni. Thanks, fellow panelists, and thanks for KRA for organizing this for us to be able to share some insights on our areas of expertise. Data is really growing exponentially, as explained by the speaker, and we are seeing data coming from new sources and increasingly becoming diverse. With this growth, there is need for organizations to be able to look at how then do they build in modern data strategies that basically drives value out of, that enables them to be able to drive value out of the data that they have. And with the modern data strategy within organizations, this can basically enable them to be able to make better decisions, more informed, being able to respond and manage risks faster, improve efficiency, and basically be able to uncover new opportunities. What we've seen for decades is that there's been a cost and complexities when it comes to provisioning of things like ability to be able to manage this data from a storage perspective, from a compute perspective, and this has basically created a difficult trade-off of either for organizations to be able to continuously purge data and slow down the time to be able to gain insights, or to take the cost of resourcing to peak requirements, where they basically build models that they build systems that enable to manage peak requirements and not to grow with the dynamism that comes with the business challenge. But this has changed. It has changed because we are seeing the adoption of cloud technology. And cloud basically provides the foundation upon which an organization can be able to build modern strategy by not only looking at the on-demand storage and compute, but enabling access to latest analytic and machine learning capabilities, things such as data lakes, which basically helps you to be able to move from a siloed approach and to adopt modern ways of centralized storage of this data and providing the capabilities around running things like machine learning to be able to detect the value that is actually hidden in this data. And with these capabilities of the cloud, the scalability in storage and the limitless capability around storage of both structured and unstructured data coming from different sources, it's no longer about just having data with this capability. But the question is, how quickly can you be able to respond in terms of processing that data and driving actionable insights out of that data?
Shadrach, before I bring in Brian on this conversation and our audience as well who's listening to us, I understand we've got very many questions coming in, so I'll be going to those in just a minute. Let me stay with you just a little bit on cloud technology. Yvonne has talked about data security. So let's bring it now down to the common, what we call in Kenya, common mwananchi, the local man.
Yes.
There's all these benefits of cloud technology and data and big data and how we can use it to predict and give us insights. But what is your quick comment in terms of data security and cloud technology?
First of all, if you look at, for example, in AWS, where we are basically the leading public cloud service provider, we look at security as a top priority when it comes to how we deal with our customers. And we provide what we call a shared responsibility framework that governs how we engage with customers when it comes to implementing security as part of the architectural design when you're running in the cloud. What I mean is that we have the responsibility of what we need to do to ensure that our customers are secure. But there's also the responsibility of the customer, because it's not about only the service provider, but it's about the customer. And we provide tools that enable the customer to be able to ensure that they are protected. It starts from, where do you get your cloud services? In AWS, we have something we call regionalization of these services. Our services run out of regions. So the customers have the leeway to choose which region makes economic sense from compliance perspective, from accessibility and latency issues, from performance perspective, and even from cost perspective. They have the choice to make those decisions. But within that shared responsibility model, we basically define what is it that the customer needs to do, from providing things like protection of data while that data is moving between systems or while that data is actually at risks. We also provide services that enables you to be able to provide governance around what the previous speaker spoke about, personal identifiable information. So we provide services that enables you to be able to pick exposures and be able to protect any personal identifiable information that might have been exposed. And we also, within that framework, we provide services that enables organizations to be able to define the accessibility patterns on that data. Who access that data? At what level do they need to access that data? So this responsibility model, in a nutshell, provides what we call security in the cloud, which is the responsibility of the customer, and security of the cloud, which is the responsibility of the cloud service provider.
Okay, thank you very much, Shadrach. I think I'm going to come to you, Yvonne, at some point to give comment on KRA's responsibility model that Shadrach has alluded to. But before I get there, let me bring in Brian to the conversation. Brian is a mathematical scholar. So from your experience and from your perspective, what are the existing opportunities for data-driven tax compliance here in Kenya and in Africa?
Thank you so much, Mangeni. I'm glad to be here. Very good company, and thank you, Yvonne, for your presentation. That was really insightful. I'm seeing KRA is doing quite a lot on that front. It's really exciting. So to just answer your question again, in terms of what can be done to sort of drive this initiative and be able to use the growing field or the dynamic field of data, machine learning, and all these big words that have been thrown out there. There is a lot that you can do on that front. And I feel like KRA has taken actually the right step with that. And in terms of, I would actually—
Brian, could you please speak up a little bit? I think I'm getting some feedback that you're not as loud. Please go ahead.
No problem. Is it better now? Good. Okay. I was saying, to sort of address your answer, I would want to touch on what Yvonne had mentioned on the pillars that KRA is actually focusing on, because I feel it's among the key organizations within Africa that is actually taking key steps around figuring out how data can actually play a key role with tax compliance, alongside some of our other speakers who are in the other session. I think the guy from Rwanda, Jean-Louis, and I know Mexico and other countries are doing very big things around that. But to touch upon that and what the opportunities are, I think Yvonne mentioned as part of the second pillar, there's an initiative to increase satisfaction for our customers at the end of the day. She mentioned something that got me really excited. When KRA will be able to pay my refund, I will be a very happy man. I made a couple of requests on that. And if we can provide solutions where something can be done on that front, would be very exciting. And I remember she mentioned something about segmentation of their customers, or what you guys are calling clients, to offer customized services. So key among them being education, doing targeted marketing, or trying to offer information that would be very relevant to some of your clients regarding different opportunities around that. Because voluntary compliance has been a very big thing, and I think KRA has done a good job around that, but there's still a lot that can be done on that front. And in terms of the use of data and machine learning, on our front, as you said, I'm a mathematical scholar here at the Institute of Mathematics. We take data and these advancements in this field very seriously. We've done quite a lot on that field. Part of my research study is actually around how to use these technologies to improve different areas, as you said, in the renewable energy space, and I'm very excited to figure out what can be done here. My key point will just be touching on the data protection DPA 2019 that was mentioned by Yvonne, and what the opportunity lies in there. I'm a very big customer of AWS. Shadrach, I use some of your services to run machine learning models, and one of the key things that we can see around that is that there are a lot of the field is growing, so more techniques are coming out that can be able to fit within the regulatory frameworks that we're working with. Data and the protection of, and the governance around protecting data for the clients with PII, personal identification information, is very key. And as part of our research here at Institute of Mathematics, we figured out that the other ways is a very interesting field called federated learning, which has been growing over the last 5 years, which allows us to draw insights using machine learning models without actually to share private information. Organizations can still leverage on the data that they have, protect their customers in that field, but still be able to utilize that data to draw up models that can improve compliance, improve organizational efficiency, while still maintaining the tenets of data protection. So I feel there's a lot of field that can be done there. And as you're talking about co-creation, it's a new word I've learned today. I was used to collaboration. As we're trying to work towards that, we'll be very open to figure out what the areas of collaborations will be, and all of us heading towards a common goal, as Yvonne earlier alluded to. I think I'll stop there and take any questions that will be coming forward.
All right, thank you very much, Brian. I think, yes, I agree with you. The new buzzword for today is co-creation. And I think it's also really nice just to hear the camaraderie that is on this table, because you use Shadrach's products, and Shadrach, I think at some point down the road, hopefully he's going to use some of maybe your paper as well. So it's really nice to hear that this is where theory meets practice. Allow me to bring in Yvonne to this conversation. And Shadrach had mentioned something on the responsibility model. I'm not sure that came out strongly in Yvonne's presentation, or if it did, maybe you could just sort of give a quick recap on that as you give comment on KRA's responsibility model when it comes to data. and then also respond to the place of BI, business intelligence, in KRA's data quality. Meanwhile, we are still taking in your questions, delegates, and we shall be getting to them shortly. So please head over to the Q&A section and we shall be addressing the panelists with your questions. Yvonne?
Okay, thanks again. I think if I get you correctly, when you talk about the responsibility model, I'm not sure if you're talking about access, how we allow access to our data platforms.
So Shadrach had mentioned that they have put in place, or they have modeled a responsibility framework on how do you manage data to enhance data security, so that there are sort of like levels of who handles what data and what sort of data belongs to or is managed by which sort of people. So the question is, in KRA, is there that responsibility model or something similar?
Yes, there's something similar. We call it, first there's the access matrix, but we also have an information classification matrix, so to speak, which defines who accesses what and for what reason, and the various levels of approvals required. For example, if a user requests access to a certain data set, what kind of safeguards have we put around that? Who needs to okay such an access? When it comes down to usage of the BI platform, because we have brought in data from various sources. Yeah, so we have more of a consolidated view, even at the level of the Insight platform, or which is our data analytics platform. We have defined, we've classified the information and who does what at which level. So there are various levels which have been defined in terms of what you can do. There are those who can only view, and we also determine what they can view. There are those who can build some models, they can manipulate data, so to speak. And this is very controlled because data is sensitive, especially once you consolidate it. So this is done as part of our governance framework, defining our data assets and the various levels of access to that data. Yes, and to answer your question on what is the role of BI when it comes to data quality, first of all, BI is a consumer of data. So the quality, as I said, the quality is the output of our analytics is only as good as the quality. But over and above that, we can also use the tools available in BI to profile our data, to track and monitor our quality, such that it makes us more reactive. Like right now, as part of our looking forward, we've put in, I would say, tools that help us to identify anomalies, even in the source systems. We are using, we are monitoring these critical data elements using BI tools, and you are able to give them a score and say, this particular field which we determine as critical, the level is either dropping or increasing. And so it informs decisions. I think the key deliverable of BI is to help us to inform decisions. So even if we can use BI to track quality, it can also help us to come up with interventions or actions that we need to do back in our source systems to improve that quality. So it's working hand in hand, both for insights and also tracking our quality. And we've implemented that as part of our quality roadmap. Thank you.
And I like what you said, Yvonne, at the very beginning. You said that data is a process, not a project. Therefore, from what I'm hearing you say, is that quality has to be checked throughout the data value chain, if you were to call it that. That just because you check the quality at the entry point or at the source point does not mean that you check the quality of data throughout the value chain. All right. So thank you very much for that, Yvonne. Allow me to bring in Shadrach, and there is a viewer question, and the question is, by use of data analytics, is it safe? Oh, the question of safety again. For taxpayers' privacy. No, was that the question? No, here's the question. Can data analytics lead to erroneous forecasts based on reliance of technology? Can data analytics lead to erroneous forecasts based on reliance of technology? Shadrach, that's your question.
I would look at it differently. It's not based on the reliance of technology, but if you look at what Yvonne started with, Yvonne talked about the fundamental aspects of building business intelligence. It starts from the data. And the key aspect here is data governance. She actually demonstrated 3 areas around data governance: data quality and management, data literacy and culture, and data availability. Once you've gone through that, when you've created a process and responsibility that ensures that the quality of data is up to the right standards, consistency and security of that data usage across the organization is up to that level that is acceptable, then it's always what you give is what you get. So it starts from the data governance aspect. How do you basically acquire the data? How do you transform the data? At this point, you can be able to enrich that data. And then out of that, how then do you create a visualization? And in other models, like Yvonne alluded to, we basically looked at the quality of that data based on machine learning models, where you basically look at the patterns in that data, not from a human responsibility aspect, but using already trained models that provide insights, even to the data quality itself. So building a BI and depending on BI does not start or end with the reports that you get. It's not about the visualization part. The hard work is on the data management. How do you acquire that data? How do you clean the data? How do you analyze the data? And then the last part is what output do you get out of that data?
Thank you very much. So thank you very much, Shadrach, for that. Just very succinctly bringing it out in terms of how do we handle data. Allow me to bring in Brian, and there is a question, and Brian's question is, with such, oh, where's the question, please? Brian's question. Okay, there we go. How do you, Brian, manage data quality and literacy levels as per various segments of taxpayers? So there's a hyphen, there's a / I don't know whether it means end exposure levels or exposure levels. So the question is, how do you manage data quality and literacy levels as per various segments of taxpayers and various segments of exposure levels? I think that's what the questioner is asking, the delegate is asking. Data quality. Brian. Brian, can you hear me? Shadrach, can you hear me?
Yes, I can hear you.
Okay. Yvonne, can you hear me? All right, it's perhaps on Brian's side. Okay, lady and gent, we are 10 minutes shy and we need to bring this conversation to a wrap up.
Sorry, Yvonne. Can you hear me now?
You're back. Yes.
Yes, I'm back. I apologize for that.
That's fine. Do you want me to take the question again?
Yes, please.
Okay, fair enough. And so the question to you was, how do you manage data quality and literacy levels as per various segments of taxpayers and various segments of exposure levels?
Okay, thank you. So I think in terms of answering that, I will hint on to what I mentioned in the presentation. As you can see, I will keep referencing on that because she did quite a good job at that. And she mentioned at one point, as you're working towards achieving these goals, one of the key things is for you to be able to make sure that the people who are handling, because it is more than the models, the math. There is the people who are actually handling the data, the people who are responsible to curate that data, clean it up, ensure these quality management and governance structures are actually maintained. So in terms of ensuring government quality, data quality, and awareness, we at the Institute of Mathematics usually conduct a couple of training sessions. We have a lot of experts within that field. And we've actually collected a lot of data, especially in the research arm. So we have developed mechanisms as to how we can empower, upskill the people who are handling the data so that they can adhere to the right standards and so as we can ensure that the quality is very well defined. I hope you can hear me, Yvonne. I'm seeing you struggling, looking at the screen.
Yes, I'm struggling, but I think we're getting you a little bit.
Okay, sorry about that. So I was saying, okay, within the institution, we're looking at two of our research. What we've done is we figured out the ways in which you can train the people who handle the data to ensure that the quality is actually maintained. Because it's one thing for you to say that the data needs to adhere to certain standards, but the people who are handling the data, the entire infrastructure that you're building around that, we have worked on performing a lot of upskilling sessions and education around it. And in terms of how that can then now be driven to draw insights later on, it's just about about being able to work together and making sure that you're always on top of the new technologies that are coming out there. This is a very dynamic field. Things keep on changing. Collaboration and working with the relevant team members, because as you say, all these elements cannot be siloed. We all have to work in collaboration towards achieving this common goal. One of the key tenets within the institute is that we cherish collaboration. How can we then leverage on all these conversations with industry experts, different stakeholders, all work towards this common goal? So they ensure data quality and awareness of the people in terms of segmenting taxpayers. I can get into the details kind of in the interest of time. There are models which have been mentioned here, machine learning models, that do a very good job at customer segmentation. That way you're able to identify clients that require specialized or different kind of upskilling or information session in terms of them being able to understand what data can do for them. I hope that answers your question. Just for the internet connectivity issues.
Yeah. All right, thank you very much, Brian. Ladies and gentlemen, we are wrapping up our session. We've had great conversations on data for risk-based compliance. And as we do our wrap-up questions, I have one more question for you, Shadrach. So I'll give you the question and then you give us your takeout, your punch line as you wrap up your session. And then I will go to Yvonne, get her question as she gives us a wrap up, and Brian as well. So Shadrach, the question from the delegate is, how do revenue authorities fully leverage on data analytics, keeping in mind lack of acceptance in collaboration for linkages and information sharing with data-rich agencies or organizations or bottlenecks in the law? Do you want me to take that question again for you, Shadrach?
No, I get you. Thanks. I think, as always, technology moves faster than the law. So innovation will always be ahead. But we have to be cognizant of the fact that there's need to work within the compliance of the law. From what Yvonne basically presented, there are what I would say compliance frameworks that governs operation of technology as a whole, not only for building business intelligence, but governance around management of personal data. I think in Kenya, we also have a data protection law. And what we've actually done is that in most cases, we've built services that basically comply with these international standards or regulatory frameworks. Our services basically comply to international standards like HIPAA, PCI, DSS. We comply with most of the ISO frameworks that are within the industry. And this basically demonstrates that we build with the compliance in mind. When it comes to the issue of security, like I've mentioned, security to me is basically a gray area for most organizations. And we can have a deeper conversation to demonstrate how cloud basically proves even to be more secure than some of the traditional data centers that probably some of the customers have used. But coming back to my closing thoughts, I think what most organizations need to do basically is to start by looking at the data governance. There's need to not only break the internal silos, but even to be more collaborative within the relevant agencies that are required to implement issues that basically benefits the citizen. And this basically creates around three benefits. Being able to, if you look at it from a data perspective approach, is that when you break those silos and build what we call data lakes, which are basically repositories that allows for storage of any kind of data, both structured and unstructured, in standardized open formats. This will basically enable you now to take advantage and start driving value out of that. Through plugging in APIs from machine learning algorithms already built in the industry, not locking an organization to proprietary data formats and specific analytic approaches, eliminating the need to unnecessarily move, transform, or be able to reformat that data. And the whole of it is that it basically enables you to be able to prepare to gain deeper insights and value out of your data. Traditionally, what has happened with institutions that basically work to administer tax, there's always been a focus on how do we evaluate, how do we analyze transactional data to be able to use it either for compliance purposes or business planning. But this goes into the history. What data analytics basically provides, and modern technologies like machine learning, is to make them become driven by foresights and insights, meaning that they're able to drive insights into the data and also being able to look into the future, what lies ahead through the foresights. So data analytics basically helps them to be able to become more insight and foresight-driven organizations.
Thank you very much, Shadrach. I think the biggest hurdle really to climb is the data security aspect, especially from this other side. But thank you for so succinctly putting it across. Every other thing sounds great, but I think for what the common man thinks about, it really is the data security. But I think one day there'll be freedom in that aspect. Let me bring in Brian. And Brian, I would like you to give us your parting shot. And as you give us your parting shot, paint for us broad strokes of what an ideal legal and policy framework for data governance for a tax administration would look like. I know you do not work for a tax administration, maybe you never have, but you're an outsider looking in. And sometimes it's great to just hear, I think, what Mr. Zake challenged us, is to have those informal conversations of allowing people to tell you one or two things, and that could actually change the course of your sales. So, Brian, what is that ideal legal and policy framework for data governance for tax administrations as your parting shot?
Thank you again. I hope I'm now clear.
Oh, you are.
I don't want you leaning into your screen.
Okay, let me relax.
No problem. So as my parting shot, I think in terms, I have never worked in the Revenue Authority or in the tax department, but looking from outside, what I would say in terms of the legal framework is that, as all my other colleagues have said, this is a field that keeps on changing. And Shadrach rightfully put it, innovation will always outpace legislation, but nonetheless, doesn't mean that there's not a lot that can be done around that. There is sorry about that. Can you hear me?
Yes, now you're back.
The team is very important that you're trying to. Okay, thank you. The team that you work with. Framework, as you guys have, I think it was called the Data Governance Council, that's looking at what are the things that are changing in the industry, how do we keep up to pace with innovation. I like saying success is when opportunity meets preparedness. So in terms of legal, I apologize. I know my internet has not been the strongest at this point. I don't know what you lost me. Okay.
I think, Brian, we lost you, but we got, you lost me when you last said success is when opportunity meets preparedness. Then after that, you went off. But I think we've gotten the gist of what you were saying, and apologies for the internet connectivity on your end.
I apologize as well. Sorry for that. In the interest of time, I think that will summarize my contribution. Thank you.
All right. Thanks, Brian. Thanks, Brian, for that. And finally, Yvonne, let me come to you. What is KRA doing to enhance integrity of the taxpayer data, to enhance compliance, as you give your parting shots?
Thank you again. There's a lot you're doing in terms of enhancing the integrity of the taxpayer data. As I said, we are looking both forward and backward. Once we have identified the taxpayer database as is, especially the information on taxpayers, critical. So this is continually being monitored, and you're we are informing the process that collects this data so that it is of acceptable quality. And also looking back, there's a big data quality project that we are just at the tail end of completing, maybe in the course of the next few months or so. So just to make sure that all our taxpayer data is because what we had it in two disparate systems. So we're bringing a consolidated view and ensuring that you have all the data about a taxpayer from one single source, so that you don't have this fragmented view of our taxpayers and their transactions. So there's a lot that's going into the quality aspect, and especially the team I work with, the quality team is the biggest team, just looking into how we can get our data to the right levels, both to improve our taxpayer experience and for us to be able to make decisions surrounding our taxpayers. So as a means of conclusion, data is good, it is very good, and technology is good. But for us to unlock the true potential of data, we must have the right structures, the policies, the supporting or the enabling framework for us to realize the value. Because unless we have that, we won't truly harness the potential that data has availed to us, especially in terms of driving compliance as a tax administration. Thank you.
Thank you very much, Yvonne, for that. We appreciate everything that you are doing to lead this particular process, which in the Kenya Revenue Authority. Thank you, Shadrach, as well. Great insights coming from you, especially in terms of cloud storage and data security. Brian as well. I think Brian has logged off. But may I ask that we take a quick screen grab for this particular session? Okay, I'm told you wave. Brian, you're back.
Yes, I am. Sorry about that.
That's when the party was ending, but welcome back. We wave again. We've been asked to wave, so please wave. All right, and thank you. I think the grab has been taken. Thank you very much, Yvonne, Brian, Shadrach. Great conversations in terms of data. Like I said, we're always constrained for time. There's a lot we need to unpack, especially the value chain of data. But perhaps this will be, it's a preliminary to a forward conversation in the future. Thank you very much. Please pass our greetings to your teams. Ladies and gentlemen, distinguished delegates, we're going to take a break from the morning session. Please grab a meal. Let's meet here again at about 1:55 p.m. and that's East African time. And we shall begin our second session in the afternoon. And in the afternoon, we are going to be having a discussion around scaling the tide, customs administration in the globalized age. We began last year with a conversation of the Africa Continental Free Trade Area. We continue that conversation this afternoon. So we're going to talk about customs. We're going to talk about global trade. You want to be there for that conversation, all right? So keep your questions coming in the Q&A. And I told you that I'm looking for the participant of the day, and the team in the background has been looking at your engagement, and I'm happy to announce that we have two participants of the day, and the first participant is Miss Hope Mutanu, and the second participant of the day is Mr. James Mugo. Mr. James Mugo. And my kind request to Hope and James is that you could send in your name and physical address so that we can deliver to you the gift hamper from the Kenya Revenue Authority. Send your name to stakeholder.engagement@kra.go.ke. I think the team will post that email address in the Q&A so that it's easy for you to just copy paste stakeholder.engagement@kra.go.ke. So please send your name, your physical address, and your mobile number to that particular email address. All right, ladies and gentlemen, thank you so much for your indulgence. It's been a great morning, great conversations. We've talked about enhancing risk-based compliance. We've talked about technology. We've talked about big data. In the afternoon, we move to trade, customs, That will be our conversation. See you in the afternoon. Let's log in from 1:55 p.m. East African time.
Are you a VAT registered taxpayer? Have you heard of the upgraded ETR system by the Kenya Revenue Authority? This upgrade is through the KRA Tax Invoice Management System, TIMS, which introduces an electronic